All right. Hello, everybody. Welcome back to the channel. We are here today to cover Robinhood's Q4 2024 earnings. I'm here with myself, Tanner, and Roy will be joining us in a bit. We are also the hosts of Robinhood Weekly, so we're very excited to break down this earnings. Tanner, how you doing?
Doing great, man. I've been talking about Robinhood all day. I quickly jumped to conclusions last Robinhood Weekly, which was on Saturday, saying that they were going to greatly miss on, EPS targets that Wall Street is putting out. I no longer think that. We're getting 50 plus, in my opinion. I think that they're going to slam earnings. Now, that doesn't mean I don't think the stock is going to sell off. We are running into this close. So that worries me. But yeah.
Well, let me pull up the stock right now. So the stock's been on a tear today, 56.32. At one point, we were basically touching 57. Do you like that we're pumping 6% before earnings or no?
No.
Why?
Well, I just think I think so last time I talked with investor relations at the Hood Summit, they were talking about how they have a large percent, like 30% of the shares are held by these funds that preferably invest in private companies, right? And so for the longest time, one, they were locked in for a bit in terms of their price or their shares. But now, since they're unlocked and they're able to trade those shares, they want to sell at above IPO prices. Okay. If you check 3 months ago, we weren't above IPO prices. So this will be the first real quarter where we're greatly above IPO prices, that their shares are unlocked and we're running into the close. I think that they're going to use a lot of the beat as liquidity to potentially find exit positions. Now, I don't think it's going to crash greatly. I just think that even on a potential double or triple beat, that there will still be some level of a fight in the stock in after hours.
Don't you think they would have sold by now, though? Right? Or you think a pump to 60 is what they're waiting for?
I think that they're going to use the volatility of the earnings. But I mean, I could be wrong. This is definitely not a space that I'm really good on, is the trading side. I'm just trying to pick a company that I think is fundamentally growing faster than the other companies in the industry. That's what I'm focused on. But, what has happened in the last 2 days that people are pumping, 5-6% in the last day before earnings? Like, I don't know.
We put the pump or dump poll in the chat. You guys can vote. I'm getting 71% pump already. I'm going to go with pump, dude. Now, look, my mind tells me we're up 40% for the year. It's up 5% on the day. The earnings expectations are high, even though I do agree with you, Tanner, and we'll talk about earnings in a second in terms of numbers, but I do think they're going to beat those numbers. It's a lot to ask to give it even more momentum. However, Morgan Stanley came out with a report a couple of days ago. They have an $88 bull case on Hood, and their core argument was, we think Q1's growth, and management usually says 15 minutes into the call what Q1 is looking like, is going to be close to like $800 million in revenue, which is going to be well above what we had in Q1 2024. So they're projecting that Q1 is going to be solid enough where, yeah, this thing probably goes higher because the growth will continue. And if it does go 20% down, 10% down, 15% down, that's a very viable dip if Q1 lives up to the expectations of continued growth. So I think from that perspective, I'm going with pump. Tanner, if you had to pick one between pump or dump, what do you think?
Honestly, I'm super neutral. It's like I'm 50-50, so it's hard for me to pick. I don't want to seem stupid. I do want to talk about how bullish Morgan Stanley is, though. This is really what's let's play a little game of trivia. What was the last numbers on assets under custody for November? Was the last one? Do you remember?
194 billion.
Yes. Yeah, or 194.6. So let's round it up. Okay? 195. Okay? What was the latest count in terms of customer count that they had?
25 million accounts?
24.8.
24.8. Okay.
Okay. Let me share you Morgan Stanley's report and what they think is going to finish out the quarter. So now I'm not talking November, I'm talking the end of Q4. They say assets under custody, end of period, 177 billion in assets under custody. What are you talking about?
Yeah, this is weird.
And then in terms of net funded accounts, they say 24.5, the consensus. So the number beside here is consensus. The one right here is Morgan Stanley's estimate. And then
Do they think that we're going to lose assets and users? Is that's basically what they're projecting?
I mean, honestly, what I think it is that they forgot about that the November numbers were shown, because it looks more along the lines of the growth rate that we saw from Q2 to Q3 attached to Q3 to Q4. And that won't be the case. It'll be drastically different. So if they're bullish at $88, and they're putting up these types of numbers, boy, they have another thing coming. Like it's going to be 200 plus billion.
Yeah, well, we know we're definitely. I definitely think we're getting above 200 billion because we didn't get December numbers for AUC. But if November was 195, net deposits alone should be able to get us to 200. So maybe the expectations, although they're kind of high, some of these banks are pricing it a little bit lower. EPS, we had a conversation about this on Hood Weekly on Saturday. What do you think we're going to get in terms of EPS?
I'm going to place it at 50 cents.
And what increased your EPS estimate from last Saturday?
The great and powerful Josh Hill. So we had him on recently, and he took a look at my numbers and he goes, you know what, Tannor, you're putting this sort of broad-based margin across and you're doing sloppy work. And I was. He said, you know what, why don't you try just calculating it for yourself what each individual line item for OpEx would be? And I started looking at it and I'm going, oh my God, it's not going to increase. 90% of their operating expenses are fixed costs, meaning regardless of the amount of volume that you've put through it, it's going to stay the same. And then we also have to remember the only thing that they guided for Q4 was operating expense. They said it would be $510 million. So this is, I mean, that's at the high end, and they'll probably do slightly higher than that just because a lot of the promotions that they did at the very end of the year. But here, if you want, I can show you this, or we can look at the stock price.
No, you share it, yeah.
So if we take a look here, brokerage and transaction, which you would expect to skyrocket, or marketing will definitely be the one that definitely skyrockets here. But if you look back at the quarters that they've done extreme volume, brokerage and transaction didn't see too big of a difference. I mean, it really stayed flat for massive changes in volatility or in the amount of volume. So what I actually foresee here, opposed to what we saw last time, is just really breaking down the numbers. Operating income is going to be, much, much higher than we ever expected. And we'll probably see something along the lines of 50 cents, somewhere around there. I have it right at the top line of Wall Street here at 53 cents. But you could probably see something else like, maybe my interest revenue is a little too high or something like this that might bring it down a few cents. But I'm not going to be far off, I don't think.
I think that's fair. And if that's the case, yeah, we're going to beat 44 cents of EPS. OpEx alone and those fixed costs will help us get there. Now, the analysts, for those that have not been keeping up with the analyst expectations, they have gone up dramatically since end of December. I think middle of December, it was 654 million. That was the expectation. Just on Saturday, it increased to 950 million. So here's a question, Tannor. Do you think we beat that on revenue? Or I think it's maybe 945. Do you think the expectations are just getting way ahead of themselves?
Baby, I'm hoping for $1 billion. Let's do it. So either their crypto take rate is so much higher than what I believe, or their interest revenue is higher than what everyone else is believing. I think all of Wall Street is putting it way too low because they have it at freaking 178 billion of assets under custody. If it comes out at 210, you're going to have to adjust those numbers. So I think margin's going to be a lot higher than people expect. I'm bullish there. So I'm going to keep up a very, very high. Can we see, currently my expectations are 997 million. Okay. That's including a contra revenue, by the way, just in case everyone thinking that I didn't include it, I did. So very hopeful.
Yeah. And contra revenue, for those that don't know, this is what messed up my projections last time, literally by the amount that they spent on contra. Every analyst was down, or they missed by about 20 million. And that's because analysts forgot to remember that the amount they're paying to bring over these assets under custody in the 1-2% transfers, that has to get expensed in some way. And it got expensed through contra revenue, which means you just subtract it from your actual revenue. And so I think analysts are up to date on that. We know that Robinhood had an explosive quarter. And so there's a world where, yeah, they put up $1 billion in revenue. Here's the other thing that I keep thinking about. They gave away money on New Year's Eve, $5 million. I mean, if a company through the Bitcoin and Dogecoin stuff, if you were on the app at the time, you got a little bit of Bitcoin and Doge. Like the fact that a company is willing to give away $5 million means they're pretty damn confident they're going to hit their numbers. Because if you're just penny pinching to beat that analyst estimate, you don't even give away $1, let alone 5 million.
To be fair, when they gave it away, the Wall Street expectations were much lower. They just seem to continuously increase them. It's seeming like we have all the data that we did in December. The only thing that's changing is January, but for some reason that's changing Q4 EPS and revenue. I don't know how that works, but I still think we'll be more on the bullish side there. Yeah, I can't wait to see some of these numbers, man. I'm so stoked.
Well, look, here's the thing. If we do get a 20% drop like we did in Q3 earnings because the numbers are phenomenal, but they're just not good enough for those analysts, I'm ready with dry powder because I think we've got a lot of evidence that this is going to be a phenomenal year for Robinhood. And if there is a pretty aggressive dip, then I'll take advantage of it. What metrics besides top-line metrics are you looking for, Tannor? I'm pulling up the Q3 deck. I mean, we got gold subs, net deposits. Are there any numbers that...
Retirement accounts, let's not forget that. I think that's going to be a big one. These are the types of foundational layers of the business that, regardless of volatility, will help stabilize the quarters. Okay. Gold subscribers, big one. Retirement accounts, big one. I can't wait to see what their take rate on crypto is. I want to ask them many questions about that if I could. I don't know. I'd like to see at some level if they can talk about 2025 potentially bringing down a fully diluted share count. I think that they're at that ability right now where just their cash stack is huge and they can kind of at least give enough stock-based compensation to flatline. They have enough cash that and buybacks that they can flatline the stock-based compensation. I want to make that sort of a mute point. So I can't wait for those types of metrics and potential commentary from management. What about you?
Do you think they bought back shares this time?
Yeah. I think they'll buy back a little bit of shares every quarter.
Yeah, I agree. I don't know if it's 5 million shares, but I do think they bought back.
I think that's a 2025 hope. I don't think that this is this quarter.
Agreed. Roy, thank you for being here. I'm sorry Tannor made you late. But
yeah, it happens, but sometimes
I'm out of here.
Forces you to.
I know Tannor made you late somehow, but I'm happy you're still here. So.
Yeah, no, it's good to be here, despite Tannor. No, just kidding. No, this will be an exciting one, guys. The stock price is treating it that way too. I always prefer, personally, when we're selling off into earnings and that there's lower expectations. But I mean, we kind of know what the numbers are from the quarterly, so.
Did you hear about the partnership with Webull, by the way? Did anyone see any Webull news today?
No, what happened?
No.
Webull partnered with Kalshi to bring out some of their things, which I thought was very funny considering what happened with Robinhood. So we'll have to see.
We got to get the CFTB to shut all that down too. So fair is fair.
No favorites here. Take them down.
That's right.
Webull's a Chinese company. They're going to give a big middle finger to the CATF.
Yeah, exactly.
Well, it's Chinese, but they American subsidiary, so they can say they're American. They're through Apex, so yeah.
Roy, do you think they put up $1 billion in revenue?
I think that they come a little bit underneath it. I think 970-ish is my expectation. That puts them just at 100% year-over-year revenue. That's what I'm thinking. Could be wrong, but we saw those December numbers. I think contra revenue will be a little bit higher than they expected just because, what it's being used for is that matching. And I think that there's been a lot of that. So, and we might actually see a little bit more than they expected quarter one. I don't know if they'll guide for it or not, but just thinking about through the logistics of that 3% match on the IRA, a lot of people, myself included, took advantage of that in this first quarter. But yeah, we won't see that in quarter four.
I think that's a very good way of looking at it. I do think contra revenue is probably going to come in higher than 41 million. I didn't adjust my numbers.
Why would it come higher?
I just think that if there's opportunities for them to capture more audiences through these matching programs, that they might take advantage of that. I think it might have been, the last time that they guided for contra revenue was 3 months ago.
Yeah.
So November and December were way bigger months than I think that they were even anticipating, and so they would still take advantage of it. But
it's a good thing
later.
Yeah, and it's a good thing.
Yeah.
And what I love is Robinhood's gone from playing pretty defensive to just full on expansion over this last year. The GameStop stuff, the bear market, crypto also being in a bear market, regulation being very unfavorable. They were just not in survival mode. That's a bad way to put it, because they were still growing. They had lots of cash and no debt, but they weren't really going in the offensive. And we've seen that from their increase in marketing spend, from these 3 events that they hosted, from all these new products that they've released. They're in full on growth mode, but not in reckless growth at all costs. So it's just a great position for them.
Such a crazy chart, eh? Holy, like the crypto volumes and everything. They have to break the chart to make it fit into their thing, but if they didn't, it looks ridiculous.
Can we talk crypto? What are we trying to hear on the call about crypto?
I'm gonna keep my comments to myself.
Okay, Roy, any expectations on crypto? What do you think?
I mean, I'm very curious about what is happening so far in this year, and also their comments on the SEC shift, with Gary Gensler being out and everything. I think that crypto is going to be very, very good this first quarter. And I think that that's more meaningful. Like, a lot of the stuff is known for this quarter. That's one of the things it's hard to see like a massive surprise, especially because they don't do guidance, but they do make comments. And so, if they indicate, and we'll see January's numbers soon enough anyway, they might even release them in this call. We're not sure, because they handle December a little bit differently than normal too. But if January is like it was in December or anywhere close, that'll get the market really excited. I'm also really curious about their adoption rate for new cryptocurrencies. Of course, we saw the Trump coin come out. I think they've added 5 or 6 total since basically the shifting winds with the SEC in the election. So I'm just kind of curious how aggressively they pursue that. That might not come out in the earnings call, but maybe an analyst or somebody will target that.
You got to fix your Cisco ticker. Yeah. So our numbers should be coming out quite soon. We'll have a little bit for me to be able to plug in the numbers into the spreadsheets and stuff, and then have time to think. And then calls at 5, Q&A at 5:30.
And then we'll analyze.
Who knows what they're going to say, right? Like, I mean, it'll be hard to know, but.
Yeah, sorry, guys. I was muted. I was just saying that besides Hood, we'll get the results at 4:05 and we'll analyze it. But we also have Dutch Bros, the Trade Desk, AppLovin, HubSpot, Reddit, and Cisco. So given we have an hour until the call, I'm sure during the preview, I mean, we'll have other companies to look at as well as we get into it.
Yeah, exactly. And I can't wait for TTD. I always like seeing their numbers just to sort of validate the advertising space, but maybe one day I'll man up and take a position.
Yeah, that's one that's perennially been on my watch list. And it's Jack Green. I know Green. Jack is the first name, right, for the CEO. Great CEO. Like, any chance you get to listen to him, really nice. Very competent in the field, and you really get a good idea of what's going on in the advertising space just from listening to that. If you only pick one earnings call to listen to.
Here's another thing. I think margin balances are going to be ridiculous. The reason for that is because Interactive Brokers said they had the highest margin balances in the history of them being a company. That has to be an industry tailwind. So I projected 6.9 to 7 billion on average for the quarter. That could get to 7.2, 7.3, which means margin interest could get up to like 105, 110 million. I have them at 100 million. Last quarter, they did 83 million. So there's a lot of numbers that could jump. They added 129,000 gold subscribers in a week in December. That's 1 out of 12 weeks. The other 11 weeks, even if they added 10, 20,000, we're going to get a massive beat on that. They added 420,000 new accounts in November alone. December, if that was kind of the same, or a little, even if it was 200,000 accounts, you're looking at 600,000-700,000 accounts for the quarter. I mean, this could be one of those quarters that's like, holy crap, this is a big one. But the stock's also up a lot, and so we're gonna have to see how the stock ultimately moves with it.
Yeah, I mean, it's tough even for the street themselves to value a company like Robinhood. It's like, okay, it's cyclical. They're clear leaders and innovators. They're growing 100% year over year. It's like, how do you value a company like that?
Yeah. You know, I was just in a call, and I'm not going to name anybody by name, but they didn't have a position in Hood because they couldn't sort of determine whether it was a tech name or a brokerage name. And I find with these sort of standout companies, looking at it versus the sector is just the wrong thing to do. You need to have, it's like Palantir versus SaaS. It's like, I don't know, you're never going to take a position if you look at it that way. You need to look at it versus, you know, their own take rates versus market share gains versus how much they're growing. Like, I don't know. I've never liked looking at companies just based on what their sectors are doing. I mean, clearly I'm a SoFi investor, so that's never been a smart thing to do. So
yeah, investing in SoFi like is not a smart thing to do. Wait, what? No.
No, but I mean, like literally, if you look at my portfolio, like Shopify, Tesla, Nvidia, comparing any of these companies to their sector is just crazy. Oh, yeah. You know, like, so yeah, I don't know. I don't like looking at Robinhood as a brokerage play, so to say, whenever the companies that you're comparing it to are the direct losers of Robinhood's success. You know?
Yeah, I would agree. The pump and dump in the chat, I'm going to close it in basically 4 minutes. 1,600 votes, 71% say pump. So everyone's thinking we're going even higher. And I don't know if that's too aggressive or it's like, no, this is going to be that quarter. I'm kind of leaning to this is going to be that quarter. But the good thing is I don't think there's any anxiety, right? Because unless you're in like short dated calls, if it drops, all right, all of us want to be in this I want to be in this for the next decade, right? So I want more shares. And if it doesn't, we get to go up and just look at the stock go higher.
Yeah, that's the game plan. Is I'd love this actually to go back in the mid to low 40s. Just love it. I'd increase my DCA quite aggressively. I'm going to DCA no matter what because 10 years out, I think we're looking good. But yeah, if it just runs up, I've got I did sell covered calls for $70. So that's about as conservative as I could be without just saying, hey, no covered calls at all. We could go higher than 70. I don't think so. But just because so many of the numbers are known, this is one of those where, unlike a lot of other companies where you just have no idea, just little hints here and there, like Hims is one of them I see people talking about in the chat. You could look at web traffic and stuff, but that only tells you so much versus like, I don't know, 90% of the earnings stuff is known for Robinhood, the most important stuff. So, but yeah, price action is price action. And man, it's been on quite the tear.
Crazy, man. I was looking at it the other day. They were up 365% in the last 365 days. Like, those are rare.
Oh, yeah. Yeah, no, it still is. I just looked at it. In the past year, 365.51%.
Crazy.
Look, regardless of whatever happens, I think we know it's going to be a good quarter. We'll see what happens to the stock, but I am just really proud of Vlad and the management team. I actually did get a chance to meet the co-founder of Robinhood, which some people don't know who he is, but Baiju Bhatt. He started this with Vlad in their dorm room at Stanford. And I got to talk to him a little bit. I'm in the Bay Area right now in California. And I got to ask him, like, what was it like to build Hood? And the number one thing that he told me, which stuck with me, which is Robinhood really thought from first principles when designing the company. He's at his new headquarters right now, and you can see the background mural. He's trying something else that's super ambitious. But he said, everyone told us it couldn't be done. You couldn't make commission-free trading. And it's like the reason they were telling us that is because it hadn't been done, or Schwab and Fidelity and all those analysts were like, it's never going to be possible to be done. And he said the moment in 2015 where they swiped up on the MVP and a trade went through and you didn't have to pay a commission for it, it changed the world, right? And so I think that the beautiful thing about this company is that it's a tech company, but the culture is rooted in let's try. We'll probably fail at a billion things, but the one thing that works is going to really work because we're trying and we're iterating in so many different ways. And that's the nature of innovation. And you either have that culture or you don't. And I think the street's giving it a premium because they're like, we know they have this culture. They're putting up the growth to justify the valuation. And so when you put those two things together, this could become a really special story later in the year, along with the fact that S&P inclusion is up for grab in March as well.
Yeah. No, man, I'm very excited. I like that picture a lot. I mean, Beju's, I know that was his decision to do that picture because the pose, his heels are on the ground. He's deeper than you. You have no flexibility. You have no business being there. So it's
Dude, he was like, let's squat. I was like,
Look how
okay,
deep this
I'm
dude
not
is,
gonna
and
say
his
no,
heels are on
but
the
like,
ground.
he was like, let's squat. I'm like, all right, let's squat. There's a couple I haven't posted yet, but I'm gonna post. There's another one where he was like, I want to do a handshake with you, but I want to make it seem like you got the better end of the deal and I didn't, and I want you to have a smile and I'm gonna have a serious face. And I was like, okay, like he's just a creative guy, bro. He's just
What's
like
that background?
Make sure you don't miss the bell, by the way.
Yeah, we got 30 seconds. But
what's the background?
It's a mural of in their new headquarters with George Washington, and they're like on a spaceship because it's a space company and stuff. Like
in a Tyrannosaurus.
Yeah, dude. Like when we talk about creative shit, this is why Robinhood is Robinhood. You had creative people leading it, and you got to be creative to be a tech company. All right, here we go, folks. It is about to be 4 p.m. We are going to see Hood earnings. We might get a reaction after 10 seconds. Might take a couple of minutes to see it happen. Thank you all for being on the journey. This is going to be very exciting to break things down. 4 p.m. Wednesday, February 12th. The stock market is now closed.
I changed my answer to dump. Just because of that, I think we're not going to have a good close.
It's over now.
I don't have my actual bell. I'm sorry. I forgot it in New Jersey. I forgot
Sell it all.
I'm sorry. All right. I'm closing the poll. 70% said pump. 30% said dump. The poll is closed. And now we stare at a number and hope it goes up.
It'll probably dump now, but it'll go up first. So that bell killed it, man.
Oh, man.
Every single day, I was like, guys, I forgot the bell. I'm sorry.
Now, did you buy this bell or is this the one you packed?
No, we're doing a meetup tomorrow and I'm giving away a bunch of like little souvenir bells. And so I'm using one for the show every day. So yeah, there you go. All right, now we wait. So we got other stocks as well. We'll see if we get, Trade Desk down 6%. There you go. 8%. Trade Desk is down. Reddit is up 1%. Bros is up 0.9. Trade Desk down 12%. That's aggressive. Hood is flat. HubSpot's up 0.16. Cisco's flat. Dutch Bros is up 0.5%. Trade Desk now down 14%.
I said I wanted entry. I mean, maybe this is it. I'll need to take a look.
Maybe that is it. AppLovin is up 0.27. Trade Desk 16%, 17%. What did they say? Dude? Crap. Like, Hood's down. I'm getting a little bit of red. It's like, it looks like it wants to go down.
Oh.
It could be a head fake. It could go straight down. We're going to see. We should get numbers very soon. And Street wants 9.44 on revenue, and on EPS, they want 44 cents.
So, on the Trade Desk, it's probably that they're like, hey, PayPal's entering the space for advertising. We're toast. Hang it up, guys. Okay, maybe not.
Trade Desk beat on revenue, beat on EPS 59 versus 57, and revenue they missed by about 10 million or 20 million, 741 versus 759. Hood is down slightly. It's hard to get a read if it's actually. Yeah, it's down.
This is them probably beating earnings, but that liquidity, they're just selling. I mean, I don't know. Maybe they haven't even got the numbers yet, and they're just really, really excited.
Yeah, that's also a thing. Trade Desk 20%. That's getting hit. Cisco's up a little bit. Dutch Bros is flat. HubSpot is up 1%. Reddit is up 1%. AppLovin 0.65. And then Hood again still flat right now. There is a 12% implied move, correct? So, I mean, theoretically, if it's green, we're going to 60. If it's red, we're going to 50 on that 10 to 12%. So we're going to.
I mean, I don't know. I'll pray, but
are you actually going to pray? You're not going to pray, Tanner. Have you?
It's more of a figure of speech, but however, if we do get $1 billion in revenue, I think that's a really good sign. I think if we get triple digits of revenue growth, beat that 100% growth rate, I think that's very good to see. So these things I am very excited for.
Yeah, no other numbers yet, guys, besides trade desk. That's the only one I got. I think it's on your chat. Roy or Tanner, one of you guys got $20 from Monosaurus. Thank you for that super chat. It's on one of your guys' chat.
Well, thank you if it was me, or thank you if it was Roy. I don't. Either way.
It tends to be that live earnings calls that I cover dump. So if it does, at least half the blame is on Amit's bell, and the other half is me. Tannor tried. You can't blame him. He tried to make me so late that I wouldn't be here, but
just resort to DDoS attacks now.
Exactly.
All right, 1 minute, 4:05. Here it goes. It is gonna be out. Dude, like I shouldn't have this anxiety. I don't have any short calls or anything, but like it's it's just
I don't have anxiety. I'm just
I'm nervous, bro. I'm
excited, man.
It's like Christmas.
I'm nervous.
Either red or green. Like Christmas.
So like we already know what their trading volume is, so the misses cannot be that large. That's the thing. It's like I'm not even worried. Like I don't know. We already know they had a fantastic quarter. What?
Oh boy, it's also my Airbnb is freezing because this Airbnb has no heat, so that's probably making me a little nervous as well. But dude, I'm sure this Airbnb is amazing, but like it's cold and like the heater doesn't work. Otherwise, it's good. All right, here we go. Here we go. It is time for we're up. We're green. So far, we're green. We're green so far. That's up 3.72. That was as soon as it came out.
Scroll out.
We're green. We're green. We're green. We're green.
Keep scrolling.
Now we have had some pump fakes here, but the thing is that Robinhood doesn't give guidance, so there's nothing really to draw.
No, it's not a pump fake. We're going up. It doesn't move like that quickly. Usually it moves either up or down and it stays there. I think we're going up. 59
below 70.
Are we about to hit 60? Are we about to hit 60? If anyone has the numbers, put in the chat. I don't have the numbers
yet.
Break
60.
Come on, 50 cents to 60. I think we could break 60.
Go.
I have the numbers.
I'm refreshing.
Oh, we did $1 billion of revenue. We did $1 billion of
I think I called it.
Oh man, that's a big beat.
That's a big beat.
101 EPS versus 44 cents. We beat by over 100%. We did $1 billion.
Wait, what?
Freaking revenue.
$1?
We beat by more than double on EPS. Holy
what?
Shit.
That must be a one-time. This must be them taking it.
Oh my God. Well, first of all, props to Tannor. He called it. He called $1 billion. He called it. It's actually more than $1 billion. It's 1.01 billion. Up 6%. Stock touched 61.40. I didn't see that. We touched 61.40. Now it's at 59. I'm trying to get the actual numbers. Give me a second. Let's see if I can pull them up.
Dude, that is fun.
That's not bad, dude. That's not bad. That's not bad. Congrats, everybody. Congrats. I mean, that is spectacular, dude. That is that's a big one.
This message goes out to Tevis. Tevis, you could have been here. Okay. You missed out.
Okay. Let me see if the numbers are out on their website. Holy crap. Quarterly results is not out. Press release is not out. We're still waiting, but we have the top and the bottom on EPS. Wow, $1 billion in revenue. Dude, analysts were thinking they would get to $1 in EPS by the end of 2025.
That it must be a one-time occurrence. That doesn't make any sense to me.
I mean, we'll see. We're gonna see soon how this is happening. Like
this might be something tax related. If they're seeing some benefits there from seeing losses in the past year, that's maybe what I think it is. SoFi saw a big benefit that way as well.
Yeah, that was the first thing that went to my mind is SoFi realized basically all their tax losses at the end of Q4, and that could be the case with Robinhood here.
Yeah.
All right, let's see.
Almost 5%.
All right.
John?
Yeah, that'll do it. Thanks. Let's get back to Kate Rooney. See if Robinhood is doing better than the trade desk. Kate?
Yeah, John, it looks like it. It was a beat across the board for Robinhood thanks to this huge tailwind we're seeing from crypto, and then equity trading in the quarter also looking like pretty strong. Deposit growth. EPS was $1.01. That does include a couple of accounting and settlement related gains. So the SEC settlement was smaller than expected. That's showing up here. If analysts do wind up stripping those out, the adjusted number is going to be 54 cents, and that was still 10 cents ahead of expectations.
That still beat. Adjusted still beat. So there you go. 54 cents of EPS.
Revenue roughly doubled in the quarter.
I mean, that's exactly, that's,
$1 million.
they just did the earnings I called for.
Yeah, there you go.
A beat there, and then assets under custody grew 88% from a year ago. So that was 193 billion. Average revenue per user also beat by around $13. And then crypto was a huge contribution in the quarter, made up the largest slice of transaction-based revenue, up 700% in a year. Options were up 83%.
All right, I have the press release. Let's read that, then we'll go through the deck. Q4 revenue is up 115% year over year to 1.01 billion. Net deposits grow to a record 16 billion. That means I think they had 7 or 8 billion last quarter or something like that. Gold subscribers, I think they added 400,000 gold subscribers, if I'm not wrong. 2.6 million. I think last quarter we had 2.2. Net income up 10x year over year. Again, that's because of the accounting thing, but still, even without that accounting thing, 54 cents of EPS. Adjusted EBITDA, 300% year over year to 613 million. We hit the gas on product development in 2024 with a new platform for active traders, gold card launch, and expanded it to the UK and EU product suite and much more, said Vlad, CEO and co-founder of Robinhood. We see a huge opportunity ahead of us as we work towards enabling anyone, anywhere to buy, sell, or hold any financial asset and conduct any financial transaction through Robinhood. Q4 was a record-breaking quarter that caps off a record-setting year in 2024, said Jason Warnick, the CFO of Hood. For both the quarter and full year, we reached new highs for AUC, net deposits, gold subscribers, revenue, net income, adjusted EBITDA, and EPS. We're entering 2024 with strong momentum as we remain focused on delivering another year of profitable growth. Okay, let me pull up the deck. The deck will give us the actual numbers.
Yeah,
I took a peek. There's some exciting things in this deck, guys.
there is some exciting things, but assets under custody came under what they showed in November. 193.
We'll have to figure that out. We'll have to see what's going on there. So let me go through them high level, then we'll keep going. Funded customers, they added 850,000 in the quarter. That means December probably had another 300,000. Gold subscribers, this is probably how they got to $1 billion in revenue as well. I mean, when you add 450,000, all of them are paying $5 a month. That's just, a lot of good revenue that's coming in, which is helpful for them on their estimates. AUC, 193 billion, and then net deposits, 16 billion. That's up 6 billion from Q3. So that was another big number for them. Revenue, 1.01 billion. Adjusted operating expenses, 431, barely an increase quarter over quarter. 60% EBITDA margins and 916 million in net income. Q4 2024, they had a tax benefit, 492 million, regardless of that tax benefit, which would have beat all the analysts' estimates.
Crypto revenue was exactly what we expected. 358 million.
Wow. Okay.
On the dot.
So transaction revenues were 672, as you can see, more than double from Q3. 358 on crypto, 222 on options, 61 on equities, and then 31 on other. That 31 is also a big increase. I thought it would only be 20. And then overall revenues, 296 on interest, 672 on transactions, 46 million on other revenues.
Crazy, guys. This is crazy.
The stock's at 58.95, up 5.3%.
Yeah, credit cards went to 8, from 4 to 8.
Ooh, great.
This is what we're gonna see, right? That was them from 6 to 4 was them writing off X1 cards. That's what they were doing. They were lowering credit limits. They were essentially writing off that business, and they'll probably see a little bit of headwind in Q4 from that as well. But 4 to 8 is them starting to add on the Robinhood cards. People have balances, and they're receiving interest here. So, yeah, credit cards are in motion now. It's slow, but we're in motion.
Okay, let me quickly look at some of these other stocks, and then we'll get back into Hood. Again, guys, we got a lot of time, so we'll look at all this stuff. But 5 o'clock, we have the call. Dutch Bros, that's up 26%. So they crushed it. Street's happy about them. AppLovin's up 16%. They crushed it. HubSpot's down 2%. Reddit's down 11%. Kind of expected Reddit to take a little bit of a beating, given it was up a lot. Cisco's up 6%, and Dutch Bros is up 25%. So for those holding any of those names that are up, congrats. Dutch Bros, the big winner right here. Reddit, was running up a lot. Makes sense. Kind of doesn't really have the growth to maybe justify as much as it's run. Trade Desk, something really bad happened here on guidance, down 23%. Then Dutch Bros up 25%. HubSpot down 3%. Okay, we still have a little bit of more coverage on Hood from CNBC. Let me finish that real quick, and then we'll get into the rest of the numbers.
Average revenue per user also beat by around $13. And then crypto was a huge contribution in the quarter, made up the largest slice of transaction-based revenue, up 700% in a year. Options were up 83%, and then equities up 144%. I did catch up with CFO Jason Warnick, who told me it wasn't just a crypto quarter. He said strength was across the board, and it's showing up in all of the metrics, showcases their business model. He also highlighted some better profitability for this company, pointed out that incremental margins were over 80%, adjusted EBITDA margins were 48%, and then for the year, and then over 60% for the quarter. But says that it was not long ago for Robinhood that they had negative margins. So talked a lot about more discipline on cost. We are also going to be sitting down with Robinhood CEO and co-founder Vlad Tannor. That's a first on CNBC interview tomorrow here on Squawk on the Street in San Francisco. Guys, back over to you.
All right, looking forward to that. Kate.
Guys, they bought back another 5 million shares.
Crazy. I'm just plugging numbers right now, but honestly, I'm blown away.
So 160 divided by 5, they bought back their shares at $32. Huh. $32. I mean,
Not bad.
not bad, dude.
I'd buy more Robinhood at 32 right now.
Wow, dude. So they bought back their shares at 19 in Q3. Just amazing use of capital. Then they bought back their shares at 32. They have 740 million left to still buy the dip if they have to.
Net deposits grew by 16 billion.
So I want to get to December metrics were 30 billion in crypto. We kind of expected that.
Yeah.
150 in equity volumes. That was good. Options was 164. That was better than expected. And then margin, wow, 7.9. There you go. I had a feeling it was going to get up there. That's the highest in history. That is massive. And then deposits were 5.3 billion in December. 340,000 accounts in December, so 420,000 in November. AUC, okay, so Tannor, what's going on here? Why do you think AUC decreased?
I mean, I'm not sure yet. I'm not sure. Yeah, I don't have an answer for you.
That is weird. I guess equity. Well, December, the market did tank a little bit on Christmas Eve, right?
I was going to say it could be sort of a little bit of takeaway from market gains being a headwind.
Yeah.
Market losses, I should say.
November was like a banner year, not banner year, banner month, just because of that election pump. And most of that pump was erased by late December, if you recall. So I think it's mostly that. I don't know that people are taking assets off the platform or anything. Those quarter over quarter type things are not like real surprising. It's not quarter over quarter, month over month. If over multiple quarters you see assets under custody be reduced and we're in a bull market still, that's when it's a problem.
Wow, dude, their rule of 40 is 106.
Yeah.
Yo, shout out to Vlad, bro. That's wild.
They're beating Palantir on that.
I mean, we've all been publicly saying if another company was going to pull a Palantir, it would be Hood. They've got the ingredients to do it, and boy, are they executing here.
Oh yeah.
The rule of 40 was first mentioned by them, I think, in Investor Day. This wasn't even a slide before, but I think now they're like, okay, we need to show this off because this is absolutely ridiculous.
Yeah, this is incredible. Real quick, let me go to Dutch Bros, and then we'll get back to Hood.
Are out. Caffeine high here. Angelica Peebles has the number. Angelica.
Hey, John, it's a big beat for Dutch Bros. Fourth quarter adjusted earnings per share coming in at 7 cents versus the 2 cent estimate that the street was looking for. Revenue also coming in ahead at $343 million versus the $318 that Wall Street was looking for. And same store sales was up really big in the quarter, up almost 7%. The street was only looking for 1.5%. And then 2025 revenue coming in slightly ahead of estimates. They're saying anywhere between 1.55 billion to 1.57 billion. So that's just a little bit better than what we were looking for. You can see that stock is up 25% after a really big year for that company. John?
All right, Angelica, thank you. Want to get back to the panel here.
Stock right now, guys, is at 59. I mean, these are not results that I don't see a single red flag. I just don't.
Yeah. Oh, and there's so many like little nuggets. So gold attachment rate, if you go to the gold slide, is at its highest ever. It's 10.5%. They're wanting to the adoption rate rather. They're wanting to make sure that continues to climb. They build value on that. in the disclaimer section, like they note that they're trying to complete these acquisitions in the first half. They reiterated this quote that I think I heard in Investor Day. We believe there are multiple ways to grow Robinhood 10x over the next 10 years. They noted that they're at 100,000 for gold credit cards, and they plan to grow that multiples of the size. They're talking about releasing more tokens. Part of that's through Bitstamp as well. Just a lot of like little things.
All while stock-based compensation went down quarter over quarter.
Yeah.
Wait, really? It went down?
79 million to 77 quarter over quarter, and 81 to 77 year over year. Page 18, or maybe it's 16. It's very small on my screen. Yeah, there it is. It was 18. 18.
It was 18. Yeah. Wow.
And they have just a note here. We don't know what this is, but they say including an advanced contract platform. So it sounds like maybe that they're building in-house that into a full platform instead of just something that they offer every now and then. We've talked about that. We've questioned if this is just going to be a continued partnership with someone on the back end or not. No details yet, but that's pretty cool.
Cash stays super high, essentially flat quarter over quarter. Like, they're making all these acquisitions and you can't even find it in the balance sheet. Like, you know what I mean? Like, it's crazy.
Agreed. Their OpEx was 431. Did they give guidance for 2025 OpEx? Yeah. 2.1 billion, which is up 10%. That's not crazy, in my opinion.
The thing is that they have to guide for their 20% long-term run rate. So I expect that they have some tightening of their belt here. Well, obviously, because it's not increasing by 20%, but a lot of it, like, they don't know. It's very hard for them to know how much they're going to spend, because if they see opportunities, they're going to take it.
Right. Margin interest was 91. Interest on corporate cash was 53, 74 on segregated cash, 50 on cash sweep, 26 on securities lendings. That was up 7 million. And then credit card, that doubled. Small business, but it doubled. And credit card could be a massive business for them if they continue to scale in 2025. That's independent of kind of the stock market, right?
Here's the closest thing that they have for guidance too. They say that for revenue, we're planning another year of double-digit growth driven by product innovation, market share gains, and expanding into new markets. So at least a double digit. You know, that could be anywhere from 10% to 99%.
Yeah, I think the street's expecting close to 30%. So, I mean, they realistically, they put up 54 cents of EPS, which is a nice beat. And it looks like they're going to get to $1 by the end of the year if they continue.
Yeah, man, I'm very happy with this, and I can't wait for commentary from them. That's going to be really interesting. Yeah, this is a company that's firing on all fronts, and a lot of people may have gotten caught up. By the way, we were worried about 100% year-over-year growth rate for net revenue. It was 115+%, 115.3%.
I think it's only fitting for us to see Robinhood get to 60 on Robinhood. There we go, ladies and gentlemen. $60 for the hood.
It's going to fall back now.
It's falling.
Oh, my gosh. Well, dude, look at that. I got to 60. Dude,
what a world.
I mean, I don't see a reason for the street to get upset tomorrow. Like outside of just, the street's the street, but like in terms of, I don't see any number that you guys see or I see that's like, oh yeah, this right here means it's blah blah blah. Like,
no, you're not going to find one. You're not going to find one.
Wow, dude, 1 billion. Now 1 billion is not replicatable every single quarter, but to pass that milestone of bringing $1 billion in revenue, and eventually it will be sustainable, maybe this is the year, but.
Yeah, I think if someone was bearish, the best that they could say is, well, a year from now, they're going to have a hard comp.
Oh my God. Yeah. I mean, yeah. You definitely have a harder comp. Folks, we are into the 61 era for Hood. We got to ring the bell.
Keep it going.
I mean, dude, this is this is everybody at 62. Dude, I'll ring it again. I'll ring it again.
Do
Don't
it.
make me do it. I'll do it. Oh, we were 1 cent away. I wanted to do it.
Come
Dude.
on.
Come on. Come on.
Do it for Amit.
There
Yeah.
we go. It's time to ring the bell. We are now at 62. This is awesome. This is pretty awesome. All right, let's see some other earnings across the board. Let me get Reddit numbers, and then we'll keep analyzing Hood. We got the call happening in about 30 minutes on video for the first time ever.
Revenues of $428 million ahead of estimates of $405 million. First quarter revenue guidance in a range of $360 million to $370 million. That's ahead of estimates of
Wait a second. Did we hit 63?
Oh gosh.
Hold on. Did you guys see 63? There's 63. We got to ring the bell for 63.
This is what making money sounds like.
This is the cash register going ka-ching, ka-ching. You guys gonna be dreaming about this bell tonight, dude. I'm gonna be dreaming about this bell tonight, dude. Wow, incredible for Hood.
$358 million. But looking at what the factors that might be weighing on shares right now, the company reported that daily active users of 101.7 million fell short of the estimate of 103.1 million. In the letter to shareholders, Reddit attributing that lower than expected user growth to, quote, volatility with Google search triggered by a periodic algorithmic change, but saying that traffic from search has recovered so far in the first quarter, saying they have regained momentum there. I spoke to CEO Steve Huffman and asked him what was driving the accelerated revenue growth of 68% in Q3, 71% this quarter. He said, we're successfully going through this transition of mid and small businesses, more objective-focused advertising, more performance ads, saying that diversification means we can grow faster over time and be resilient. So certainly pointing to accelerating revenue growth, but shares do seem to be lower on that user issue. Back over to you.
All right, Julia, thanks. If it trades 12%.
Reddit's down 15%. Robinhood 62.78. It's gonna make a run for 63 again. HubSpot down 4. Reddit down 15. Reddit was pretty predictable, so seems like that one's coming down a bit. AppLovin's up 13. Trade Desk, this one I didn't expect. I don't know why this is happening, but we'll try to get an update on that. Dutch Bros, I mean, congrats. I don't follow this company that much, but 7 cents versus 2 cents. They're the new version of Starbucks, I guess.
Yeah, Matt Money needed one that would just really be a winner for him because his other stocks are only up hundreds of percents. So
He needed it.
Josh, thank you for the $50 super chat. 1 billion LFG. That can't be right. Am I seeing EPS of 101? No way. Net income. Well, yeah, it was because of the accounting thing, but shout out to Josh. He's been super bullish on Hood for a long time. He got it. Troy Baker, thank you for the $10. I'm beneficial. Also an OG of the Hood community, $10. Thank you for the super chat. 1 effing billion. And then Eddie as well, who's been covering Hood for a while. 1 billion. Congrats, Hoodsters. It's pretty incredible.
Yeah. Holy freaking crap. I want to show some spreadsheets here if you'll allow me.
Did we hit 64? No way. We hit 64?
All right, let's do it.
no.
No, I got to confirm. Did we hit it? Hold on. No, 63 is what I see. 63. So we didn't hit it yet. But we might get there.
Okay. So me and Josh were talking about what the operating expenses would be. Obviously, they would climb, right? This is something that we, as investors, would know because they had so much volume flow through the system. So they would have to climb quarter over quarter. Guys, they went down.
Wow.
They went down by 30 million. Okay, so like this is crazy. If you look previously, this was 76% of revenue last quarter, total operating expenses. This quarter, 45%.
Yeah, that's what controlling your own costs looks like.
Yeah, like crazy. Operating income went from 151 to 556.
So
crazy.
So
now,
that helped EPS, right?
Oh yeah. Yes. Yeah. This is they dominated here. They were essentially they might have been under their low side of their guidance for operating expenses. Like, how does that even happen?
I mean, you got to be a tech company with fixed costs, right?
Well, general and administrative seem to have eaten all these cost deductions. So I don't know how they lowered it by 60 million, but they did. We saw a big increase, $33 million in marketing. We expected that 100%, and then a decent climb. Don't look at my guidance, by the way. My guidance is just showing what I thought I was going to see in Q4. Okay, so this is not for Q1 or anything like this. That was previous. But this is the column that we should be expecting. So brokerage and transaction, this is what ate the cost difference between all of the volume growth was $11 million extra quarter over quarter. Okay. It's nothing. It's absolutely nothing. Like, look at it. Adjusted EBITDA went from 268 million to $613 million, a 60% adjusted EBITDA margin.
Wow. I mean, I think that's what I'm curious to hear on the call is like, how do they do that? And can they keep doing that? Because then this thing is, like, dare I say, this thing is cheap. If they can keep booting up these numbers in 2025 along with top line growth, it's going higher. Oh
my gosh, man. They've done like their best margins that they've done on EBITDA. Like we can see 31% here, 39%, 44, 42, 60. Holy.
Yeah, this is a tech company. I mean, it's not just a brokerage. The way that they execute their culture, their efficiency, man.
This is a tech company. Zen, thank you for the 12 euros. Shout out to all the hoodies in the chat. Love you, Amit. Thank you, Zen, for being here. And congrats to everyone who's been part of the Hood story. I mean, this has been an exceptional journey, exceptional company, and they are executing at an exceptional level. Tesla Dragon, thank you for the 69.69 super chat. Let's effing go, Hood. Thank you for all your awesome coverage. I bought at 17.37, and now I continue to buy in the 60s. I love it. Look, I've been buying at 51, 52, 55. I was buying at 37, 38. And like conventionally, you're not supposed to buy when it goes higher. At least people think you're supposed to give it a breather. But if it really does have a premium towards exceptionalism and there's growth, you buy into strength. And I kind of made that mistake on Pounder. And Roy, I think you made that mistake as well, right?
Yes. Yeah. Oh, yeah. Averages in the 12s. I'd rather my average would be in the 20s because I'd have a lot more.
That's a really good way of thinking about it.
Yeah. Ultimately, Robinhood, like it's basically, this is a long-term company, long-term hold for me. I don't know where the price is going short-term. I'm never good at predicting that. But I know long-term where the company is going. And so I have no problem just buying a chunk of it. I actually didn't DCA yet this week. I was hoping to get cute and do it right after, maybe a little bit of dip but still going to DCA in the 60s, still going to DCA. And the nice thing is it's basically a set amount for me. So the higher the price goes, the smaller that is, the lower the price goes, the bigger it is. But quality companies, don't be afraid of averaging up. If you plan to hold it long-term, you don't need the money in the short term.
And the key word is quality. And I think what we do on Hood Weekly and as a community is try to figure out, is this quality? Like outside of the growth, can you trust management? Are they doing the right things? Do they care about shareholders? And it's like, the answer is a definitive yes. I mean, this is a quality tech company that sees a massive opportunity and they want it. They're going after it. All of us got to talk to Vlad at Investor Day and we got to talk to the employees. The employees are like, dude, this guy he doesn't stop working. He really wants to, he's hungry and he's very successful already. So like to still have that hunger, it really comes from a founder, and it seems like he wants to keep this going.
All right. Do we want to take some guesses? What was the take rates for equity, options, and crypto?
Okay, options. I'll go first. Options, I'll say 47 cents.
Okay. Last quarter, it was 46.
I'll go up by 1 cent. Equity has always been 5 cents, right? So I'm
well, I do it as a percentage basis. So
5%. I'll do 5%.
No. So last quarter is 0.13%.
I'll keep it the same then. 0.13.
Okay.
I don't think that changed.
Equities stay the same. And by the way, year over year, all these are quite down. So like as time has gone on, equities have come down. Options was at 41 cents. Last quarter is at 46 cents. Roy, what do you think these are? And then what did you think for crypto? Here. This is what we'll do. Because I know it's hard to visualize these numbers. So I'll just bring it up. I'll just hide my.
There we go. Yeah, I knew equities was really low, and but
so these are for Q3. These were the take rates. Can sort of highlight them here. Oh, sorry. Here and here.
Yeah, I'd say equity probably stayed the same. Option
Okay.
is probably a little bit higher. I think Amit's right, but I'll go 2 cents up. Just Price is Right him. See how he likes it.
And then what do you guys think for crypto, Amit?
I think we got 58 cents on crypto.
Let me go 62.
60, like 0.62 and 0.50 or 0.50?
Yeah.
0.58. 0.58.
0.58. Okay. Excluding this, because this is what I suspected. But equity did go up. We did get 47 cents on options, and it was 0.5, which was higher than what I suspected on guidance.
So we went up on all three.
Yeah, up on all three, which is crazy.
Yeah, that's really good. Yeah, like crypto's been the one that they've been playing with the most, so that was the biggest wild card. So that's really nice to see. Yeah, even equities, like that's actually kind of surprising.
Equity volume's insane here.
Yeah.
Dude, they're doing their thing. They are doing their thing. This is special. This is pretty special. Let me see some other earnings we have, and then we'll keep getting into these numbers. We have Dan Dolev talking Robinhood on CBC. Let's go to him.
Ooh, let's do it.
Diversifying outside of just being based on trading, but it's a really strong trading quarter. So how should investors read it?
Hey, last time, we met, I told you they smoked earnings. I don't have a better superlative today. So, they smoked earnings plus. I think what you're saying is very true. What you're seeing now is, the present. If you think about the future, they're going after a $600 billion TAM, getting into Asia. So all these good things that we're seeing today, revenue ahead, 7x growth in retirement, 88% growth in AUM, 60% EBITDA margin, that's just the beginning. It's going to get way better down the road. So I think things are great and they're going to get better down the road.
I'm just thinking about what Interactive Brokers told us a couple of weeks ago, how there was a strong risk appetite. There was a lot of margin trading. It's kind of that kind of market right now. That doesn't, it sounds like, get Robinhood to where it wants to be diversification-wise, maturity-wise. What do investors need to look for to have a sense that it's getting there and that it's going to be, stable up and to the right?
Yeah, I agree. Look, this is now the things, things are as good as they are in terms of the animal spirits and what it did to their trading. But I would say there's a lot more self-help here, right? They're getting deposits in. They're up 16 billion versus 14 billion last quarter. They have ARPU growing 60% sequentially. All these things are not just because of the animal spirits. It's self-help. I think to answer your question, John, the most important thing, they need to get into Asia. They need to get into Europe. They're going after a $600 billion TAM. If they just take 5% of that, it's a $30 billion company, right? Versus sort of the $4 billion today. So I think that's what investors are looking for. And I have faith in that management team that they can deliver.
All right. Trading in the 60s in overtime, getting close to your price target there. Dan Dolev, thank you.
Thank you.
After the break.
Even Dan didn't have the words, smoked. What's the right word here? What is the right word to describe this? So it's a big quarter.
Insanity.
Insanity. That's the word.
I like seeing the new color scheme too. Small thing, doesn't really matter, but it looks so much cleaner.
How many employees do they have? Do they hire this quarter?
We'll see that in their 10K. I don't know.
No, they show it off in their.
They do.
Yeah, it's one of the things that they highlight.
They had a increase of about 11 employees. No,
about 11.
No, 8, yeah, literally 11. Dude, that was quick math on my part. Yeah, 11.
Quick math.
What? Why are you laughing?
You said about 11 from 82 to 93.
No, but that's 11, right?
Yes, it is.
Not
but you gave this weird rounding, like you were adding the percentages when both the numbers are right on the screen.
I'm just saying, at least I got the number, bro. Anyway,
all right. I'll stop being too picky.
Can you throw it up slide 19? I think this is cool too. We took a quick look at it, but this is kind of guidance too as far as OpEx expenses. They did note that they're removing, starting in Q1, the provision for credit losses from that, which I think is a good move. But you can see like they're ramping up revenue massively, and yet they're controlling costs. Like you should expect OpEx and SBC to spike up a little bit, and it is a little bit. But man, this is really, really good.
What did you guys say margin balances was? Was it 7.9 billion?
Yeah. Yeah.
Okay. And contra revenue, is there any thing on that?
Let me see. Contra. And we'll go through gold in a second as well. Contra revenue. Did they move that slide? Yeah, they don't have a slide for it this time.
43.
Oh no, sorry, it's right here. Yeah, 43. Well, that's basically what we expected. That's great.
Yeah, that is.
Yeah.
That's amazing. That's great, dude. That number did not tick up, and they had a lot of room for it to tick up and still crush earnings. Look, guys, I don't know what's gonna happen to the stock. It's up 9% right now. It could go down, it could go up, but after these numbers, as an investor, you should be asking yourself, how can I get more if you like these numbers? And if you get some irrational 10, 15, 20, 30% drop off, I mean, those are opportunities to take advantage. I mean, we saw this with NVIDIA. The market gives opportunities. NVIDIA fell to 113 for, in my opinion, no reason. Now back to 130. So if we do get a dip based on these numbers and based on what they say about January, which I think those numbers are going to be good as well, that's an opportunity.
So true. And a lot of people take those sinking, the sinking price action as a way to say, see, I told you this is why I didn't buy in or something like this. But really, as long as the thesis doesn't change like it didn't in NVIDIA, and you can see through, like the only reason why it would ever crash like big, like 20+% is because there's some level of a new bear case or so it's hard to see through those things. Even though everyone wants to buy the dips on companies, there's usually some sort of new bear case that comes along with those. So to weigh those out is actually a very hard thing to do, but can make you freaking rich.
Look at their MAUs as well, bro.
Yeah.
Like last quarter it declined 800,000. It's up 3.9, about 3.9 million. Because 14.9 minus 11 is about 3.9. So it's up about 3.9 million. I thought you guys were going to laugh at that. You guys didn't laugh. Okay, whatever. They're not even paying attention, guys.
No, I was looking.
Numbers. I get you though. I get you.
Somebody. I saw a couple of people mention that January numbers were out. They're not as far as I can tell. So
yeah, no, they're not out. They're not. They don't give January numbers. But 15 million users, bro. I mean, like people are coming back and they're engaging with it every day, and probably not just trading. Probably looking at the credit card. Probably looking at stock quotes. I mean, whatever they're doing, they are. Oh, did they share January metrics? Hold on.
I don't see that.
I think Evan tweeted it. Holy crap. Did they share?
Oh.
It? Dude, Robinhood doesn't care anymore. They're just going to give us all the numbers.
Yeah. Jeez.
Yeah, we got it. Assets under custody, 203 billion. Net deposits, 5.7 billion. Funded customers, 25.5. So how many did we end December with? 25.2?
Yeah, I think you're right.
So that means we added 300,000 in January. Yeah. Wow.
Yeah, they for a long time they were at 100,000, and that they just do that every single quarter. Now it's accelerating.
Yeah, we have included January 2025 metrics to provide insight into our most recent business activity. That's also probably why the stock is up, because now the street knows, okay, January is on track to be pretty damn good.
Yeah, even they did total trading volumes there. $144 billion in equities, crypto 20.4, Roy.
Wow.
20.4 on crypto again.
That's amazing.
I think that's what everyone hoped for, right? That we knew it wasn't going to be as high as November and December, but we just didn't want it to fall back into the teens or the single digits.
Right.
20.4, that's super strong. Options 166.6. That's a new company record.
Holy crap. And February's been okay so far, the first 15 days, right?
Margin book, 8.3 billion.
Oh my god.
Yeah, that's huge. Yeah, margin book is really increasing. They also, keep in mind, they launched it in the UK. That's one of those things people are waiting on. They've now launched options. They have, of course, 2 more products that they're launching, the ISAs and SIPs here soon. So yeah, I think UK is going to be a meaningful part of this growth over this year.
Wow, you could really miss those January numbers though if you aren't looking hard. Like, look at how they just tucked this in, eh? It's just right on this column over here.
I mean, dude, if the street hasn't seen these numbers yet and they're waiting for Vlad to give the guidance on the call, this stock could hit higher once we hear these numbers in 30 minutes.
You have the dashboards. They didn't even include them in the dashboards. This is only December. They just snuck them in right here. But you can see this, like options contracts traded 166.6 million.
Oh my gosh. Congrats, everyone. This is a big one. This is a big quarter. Sarah, thank you for the $70 super chat. Hood to 70. Let's go. Been day trading the stock to replace my day job income, but I'm holding this. We should see big movement this week. Sarah, thank you for that and appreciate you. Rick says, thanks, Amit. I bought some calls last week and added some this morning. Congrats. Thank you for the $5 super chat. This has been incredible. This has been incredible for this one. I think we got a video from Vlad. Let me pull this up real quick.
Yeah, he's doing sort of what Shopify's president does, where he gives a little overtake on X. I liked it.
All right, here's Vlad. Oh, sorry, I wasn't even sharing. My bad. Sorry.
Hello, everyone. I was just reviewing our Q4 earnings results, and I wanted to share with you all a little bit of a summary ahead of the call. Q4 was a record-breaking quarter for the company, our first quarter with over $1 billion in revenue. And this was driven by big gains in market share, record net deposits of over $50 billion, and record gold subscribers. As we look to 2025, we're going to continue to make progress across all three of our strategic arcs, being the #1 platform for active traders, being #1 in wallet share for the next generation, and building the #1 global financial ecosystem. And that's our 10-year arc. 3 big product events are coming this year as well, and the agendas are already packed. Gold event in March, our first crypto event, and we're bringing back Hood Summit later this year, which is for active traders. So you'll find more details on all of this in our press release or in our first ever live video earnings, which you'll see on X, YouTube, and our IR website, investors.robinhood.com. See you there. Thank you.
Love it. Thank you, Vlad.
My mom just texted me, and she just texted me a picture of her portfolio. She's happy. She's happy right now.
Is she using Robinhood?
She uses Robinhood. She is loaded up on Robinhood in her Roth and her regular account. So is my sister. So is my dad, to be honest. It's like, yeah, we're a Hood family, bro. We're a Hood family.
Well, guys, I'm so happy that we started the Robinhood Weekly. It was a good time to do it. We are the boys
My
in the
mom
hood.
just texted me. She said, "Stop talking about." Mom, are you? I love you, Mom.
Are you watching?
Wow, my mom doesn't usually. She's usually on the phone with her friends. She doesn't watch my stuff. Thank you, Mom. Glad you're here. Hope you're enjoying it. Love you. All right, Tannor, continue. Sorry.
Hi, Amit's mom. But what's it called? We are the boys in the hood. Let's make some freaking money with this company. This is a great one. And it's not just about one quarter that does well based on market gains. It's one that it has plenty of tailwinds because of actual shifts in greater outperformance than what the market is actually seeing. So that's very, very exciting. I want to show you guys some non-GAAP numbers, some things that maybe they won't show you. So one, cumulative funded accounts, 25.2. They actually stated that the exact number was 850,000 new accounts added this quarter. Let's see when the last time they've done those types of numbers, 850,000. I know that they have. Yeah. They used to grow crazy during 2020. But essentially, we haven't done that since Q3 of 2021. We have not added 850,000 net new accounts. And look at the customer acquisition cost that we get because they're doing that.
Wow.
Look at the change.
Goodness gracious, dude.
So you go from high 300s down to sub 100. This is just crazy. Average revenue per customer, 164 from 105 last quarter, or $81. Like, we more than doubled the average revenue per user.
That's
okay.
Amazing.
These are all compound. Like, they add more customers. Okay, that's worth giving it a premium. Okay, each customer is worth double. Okay, that's great. The cost that they actually get these clients onto the platform, that gets cut by 2/3. Okay, well, that's freaking great. These are unbelievable trends. their pricing is crazy. I would have thought that this was an endless stream of continuous fall to the bottom on equity. So seeing this flatline or even recover is just crazy to me.
This is a company and a stock that is set for further growth this year. And they're proving it not on only the top line side, but on the bottom line with cutting these expenses.
Gold subscribers doing well. Gold adoption 10.5%. Why isn't that showing? Percentage of revenue for gold subscription actually fell just because there was so much freaking volume. So that's 4%.
That's good.
Yeah. I mean, that is good. Percentage of funded accounts that have retirement accounts, 4.56%. Like, this is crazy.
Well, going back to your point, Tannor, they just said a couple minutes ago. I mean, this is why we started Hood Weekly, right? Like, there's a little something special we saw in this company. Obviously, the biggest bear case on Hood, I think, is that it is tied to the market. And the markets have been very good the past 2 years. So Robinhood has been able to rise from the ashes like a phoenix and kind of capitalize on all of this. But I think that bear case misunderstands, if you're in a bull market, someone needs to capitalize on it, right? If crypto is going to the moon, then Coinbase, Robinhood, someone needs to capitalize on it. If not, like what's the point of being in a bull market if there's not companies that can benefit? 2, Robinhood is showing expense discipline, which means when things could potentially be not as bullish, they should be able to diversify enough to be able to generate revenue, or if they can't generate top line growth, be so disciplined on the bottom line that they can still show growth, which is the tenets of a really mature company.
Does this absolutely guarantee, someone just said this in the comments, I'm ripping them off, so try to find that. I might have just lost it. Does this guarantee S&P 500 inclusion?
Oh yeah, we are getting into the S&P.
Yeah.
Without this quarter, they were getting in this year. With this quarter, they might be getting in this quarter. I thought that they were going to when they announced it in December, but there's several other very quality companies. One of those is the Trade Desk, which also reported today. I know that like a single quarter of earnings doesn't make or break, but if you're like neck and neck with a company and you're just hitting it full throttle like Robinhood versus like they're, guiding it a little bit more conservatively, I think that gives you an edge.
So here's another insight I'll share from the meeting I had with the Robinhood's co-founder Baiju Bhatt. He was talking about moats, and he was talking about how a company develops a moat. And I said, I had some debates back in the day with people on like, what is a moat? What does it mean to have a moat? How do we get to a moat? And on Robinhood, I would say that UI is a moat. And one of the biggest bear cases, again, was like, it can be copied. UI is not a moat. And he was like, well, the reason we always thought it was a moat is because people using the product means that we can give them the ability to continue using the product with new products, services, upsells, etc. And so when you think about someone like my mom, who, she's not logging onto Schwab, Fidelity, like she needs something super easy to navigate to be able to buy or sell a stock. She's selling covered calls, selling puts, she's getting into option selling. Like for her to do all that stuff, it needs to be a simple user interface. And the beautiful thing is, like from thinking from first principles, if it's easy to use, more people will use it. And so user engagement should be up, trading volume should be up, average revenue per user should be up, net deposits should be up. When my mom gets her paycheck, a decent chunk of that goes into Robinhood, not Bank of America. And that's a generational product that has not been copied. And so from that perspective, I think we're going higher as they continue to scale that to Singapore, to the UK, maybe to India. I mean, like the sky's the limit for these guys.
Yeah. In the UK will be particularly interesting because it'll be a good test once they have the ISAs and SIPs out of how fast it can actually capture that market share in a place where, frankly, there's not as many active traders, investors like there are here in the States. And IBKR is like, they're good, they're solid. Robinhood beats them as far as pricing on most products just by a little bit. But this isn't just a race to the bottom, a commodity war where it's like, hey, we're just going to undercut you a little bit, get a little piece. No, this interface that they have really gives them an advantage. And it's not just their Amit, that it used to be that people would say, well, it's a great platform to start on, but advanced traders will move on to something else. Well, they're building out Robinhood Legend, and they're adding features to it all the time. And so that it gives, an excuse, which I don't think it's tough to twist somebody's arm and make them stay with Robinhood. But it's like, hey, you want something more advanced? We have a great platform for you. We're building new features, and we're open to feedback on what you think that we're missing, and they're adding that. So, and they're not just like saying, hey, we'll add this, in the next 5 years, like, SoFi's level 1 options. It's something that they're actually like wanting to build out really rapidly for the consumer, which is great.
I'm going to get a drink really quickly before the earnings call starts.
Drink what? Tequila? What are we drinking tonight, boys? What are we drinking?
I'm going to have a coffee.
Not Celsius. Monster.
All right, yeah, go get your coffee. We'll be waiting here. Yeah, guys, in the chat, let me know your raw emotions right now. What are you guys feeling? Go ahead, Roy.
I was just going to say thank you for the super chat, Canem, Tomlon. Really appreciate you. Very kind of you. You just bought me some extra monsters or Robinhood stock.
Well, now,
choices.
Yeah, $20 could get you a share of stock a year ago. Now it's
like that. That's the thing with companies that if you have been tracking it for a while and following it, good companies perform well tend to go up over time. So, if you have long-term horizons, I see a few people asking like, maybe this is the top. Is there going to be a pullback? I mean, there could be. Over 10 years, do I think that I'm going to personally regret investing in Robinhood here? No.
No, not at all.
Now, will there be companies that outperform Robinhood? Sure, there will, but I'm not going to get all those right. And, a lot of times it's easy for me to just say, hey, is Robinhood going to do what they did, go up 365? Well, now I don't even know what it is now. 365% in the next year? No, probably not. But no, that's not happening. That would be insane. But could it, over the next year to year and a half, double? Yeah, that's really good.
Yeah, I think it's a question of having a long-term trajectory on this. A lot of people that have been in the stock for a long time, again, it's harder to buy at these levels. But when a company continues to grow, we literally experienced it with Palantir. More growth was happening, and Roy and I and a lot of other people in the community were like, "It's going up too quick. We're going to hold out," and that's just the wrong mentality. It's just the wrong. Like, you don't have to go super aggressive about it, but like, you want to own more equity. The whole point of getting financially independent is having assets. Either that's your own business, that's your own brand, or you need real estate or stocks. You got to have equity in something to be able to escape living off a paycheck. And that means you need to have more shares at the end of the day. And it's very hard to find a generational company. I mean, there's thousands of public companies. Most of them suck. Most of them can't file their 10K on time. Actually, no, most of them file their 10K, but one of them can't. But one of them has a lot of attention. We're not going to name names, but
yeah. Did you trade that one? You did, didn't you? Yeah. No, I mean, you can trade less quality companies, but like the quality ones where you're like, hey, this is a gem, this is a unicorn, this is special. Just buy and hold that, guys. Don't worry about price action. If you have long-term horizons, if it's money you don't need over the next 5 years, if you into trading, trade anything. It can be garbage and you make lots of money, but yeah, this works for me. And one of the things I really like and admire about you, Amit, and Tannor as well, is you guys, call it as it is. And when you make mistakes, like, hey, should have bought more when it was less, bought on and as you learn, you kind of share that process. Tannor has not always been bullish on Robinhood, but he saw this back when it was like $17 and it's like, oh man, you're buying in late. Dude, this isn't late. Look at this. and Amit, you call yourself out too. You're like, hey, learn this, made this mistake. We're all learning here together. Appreciate you guys in the community too.
Yeah, I think what's funny sometimes, and thank you by the way, but I still kind of stick by the idea that Robinhood before Q1 of 2024, I think it was, or potentially it was earlier than that, the quarter where they really broke out in revenue, I don't think I would have ever spotted it. It just didn't show off the indicators that I was looking for. I think it's the type of thing that like the people who sell Palantir at 15 on the way up, they go, oh my gosh, I should have held till 100. You would never have. You would have sold at 20, 25, 30, 40, 50, 60, like whatever the indicators were that you were looking for, you like, I don't know. So I'm happy where I bought and very happy to stick with the company. This is a real turnaround play and there's so many tailwinds here.
So we got the call in 2 minutes, guys. What are you expecting? It's a video call. Vlad is stepping up the production. Anything interesting that you think we're going to see in this?
This is super beautiful, by the way. This looks great. And them putting it on X and YouTube just goes to show you that retail is becoming such a massive part of the investor base. Like self-directing in general is becoming popular. And that might be the biggest tailwind that Robinhood has.
Yeah, shout out to Arnie. Arnie will be interviewing Vlad tomorrow at 2:30 on Twitter or X. So if you are not following him on X, you can follow him on X. You can also just scroll to my profile. I quote tweeted his post, and you'll find the link. But Vlad will be on CNBC tomorrow, I think at 9:40, and he'll be on Arnie's X Spaces at 2:30. So,
Was that what he was indicating on X about
Yeah.
old stock, new ideas, something like that?
Yeah.
And shout out to Arnie. Like, Arnie is the reason why I actually took a second look at Robinhood. He and another person were like looking at this. I was like, I at least need to give it a look. And a lot of times I'll give it a look and be like, I'm not sure. Robinhood, it was obvious. It was just so freaking obvious. So shout out to Arnie. Appreciate you, man. I made my own decisions, but without you just saying that you're looking into it, I might not have looked.
Arnie and I were discussing the Hood thesis back in June of 2023, and what he called them at the time was an asset vortex, and that always stood with me because that's what they've become. They went from 87 billion in assets to above 200 now, and it's been an incredible story for them. But they really have been a vortex of compounding assets and then executing against that growth with those assets. So shout out to Arnie. He'll get the Vlad interview tomorrow. Vlad will be talking about the results, and I'm sure we're going to get a lot more coverage from Vlad on these results in the coming days. All right, here we go. First ever video earnings call in a minute. I think it's going to be fun. I think it's going to be Vlad and Jason. I don't know if there's going to be anyone else there, but it'll be CEO and CFO. And
do you think it's going to be a video call the whole time? Or do you think it's going to be more like Palantir where they do like pre-recorded remarks and then they jump into a video call?
Not sure. I think it's video whole time, but I guess we will see what it looks like. It might be pre-recorded results before, though.
Man.
All right, here we go. If it's just like a bunch of them just sitting at the table, like all the C-suites, Steve Quirk might be their chief brokerage officer. That would be fun. Hood stock right now, before we get into the call, is at 62.50.
Are you guys nervous?
No, I'm excited, dude. I'm excited.
Just excited. This is great.
I'm excited. All right, here we go. 10 seconds.
Why are you playing this music?
That's Robinhood's music.
Thank you to everyone for joining Robinhood's Q4 and full year 2024 earnings call. Joining today are CEO and co-founder Vlad Tenev, CFO Jason Warnick, and Senior Manager of Investor Relations Jack Riemann. Vlad and Jason will offer opening remarks and then open the call to Q&A. During the Q&A portion of the call, we will answer questions from institutional research analysts, and we will also answer questions from retail analysts who may hold an ownership position in Robinhood. As a reminder, today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation, and our SEC filings, all of which can be found at investors.robinhood.com. Today's discussion will also include non-GAAP financial measures. Reconciliations to the GAAP measures we consider most comparable can be found in the earnings presentation. With that, please welcome Vlad and Jason.
All right. Good to see everyone. Thank you for being here for our first live video earnings call. Hopefully this is both informative, but also entertaining for everyone. Let me first start by saying that this was a big quarter for us. So we did over 1 billion in revenue for the first time as a public company, really for the first time in the history of the company. And that capped off what was a record-breaking year with over 3 billion in revenue for the whole year. And I would say that this was driven by a lot of things. And let me remind you the three priorities we have as a public company. So the first one is being number one in active traders. Second one is being number one in wallet share for the next generation, and our long-term arc being the number one global financial ecosystem. I'm really proud of the product velocity in 2024. So the team executed unbelievably well. And there's a couple of things to point out. We began scaling the Robinhood Gold Card. And Robinhood Gold Card, it wasn't just a Me Too credit card. I think we did a nice job building a revolutionary credit card, and it has both best-in-class rewards and user experience. Robinhood Legend, which we announced at the Hood Summit event just a couple of months ago, our first desktop platform built from the ground up just for active traders. And I think what's been even more amazing than the initial launch is we not only rolled it out, but the team's been executing really well and adding new things on a weekly basis. It's been energizing to see the customer feedback and to see the team respond to that. New things are landing, new indicators, new features pretty much every week. And as a result, and I should mention one other exciting thing. We added a whole new derivatives business. So Robinhood Derivatives launched also last year at the Hood Summit, and we're offering both futures outrights and event contracts, which is an innovative new asset class that our customers are super excited about. So we're excited to do more there. As a result of this product velocity, we saw fantastic business results. I mentioned the $1 billion in revenue quarter, $3 billion for the full year, which, by the way, up 58% from 2023, almost and 2x from 2 years ago. And some of the things we track on a more input-oriented basis, market share up 30% year over year, both for equities and options. Record net deposits of over $50 billion, which is over a nearly 50% growth rate, multiples of what traditional brokerages are seeing. And Gold subscribers also had a banner year, up to a record of 2.6 million, which is 80% growth year over year. And now we're at over 10% attach rate if you look at the overall customer base, over 10% Gold attach rate. And we've continued to see strength actually through 2025. We're closing in on 3 million Gold subscribers. And perhaps the thing that I'm most excited by is if you look at the net new customer funded accounts in Q4, of those new customers that joined Robinhood in Q4, over 30% have adopted Gold. So that 10% attach rate increases to well north of 30% if you look at new customers. So the team's been really executing well, and there's more to do, but we're proud of the progress we've made there. There's going to be 3 events in 2025, 3 new product events, and the agendas are already packed. So we're very excited for them. Gold event is coming up in March in San Francisco. We're going to be launching a bunch of new products and features for the Gold program, including advisory, which we've been working on, and I think you guys are going to like what you see there. Our first crypto event in June, which will be in France. And then, of course, Hood Summit, our active trader event. Got great feedback. We're going to bring that back, and that'll be later this year. So I'll talk a little bit about what you can expect in 2025. But first, let me turn it over to Jason for business and finance results.
Thanks, Vlad. Q4 was a record-setting quarter, and 2024 a record-setting year. In both, we reached new highs for many of our financial measures and KPIs, including assets under custody, net deposits, Gold subscribers, revenues, adjusted EBITDA, and earnings per share. Here's some of the full year 2024 highlights. Revenues up 58% to nearly $3 billion. Adjusted EBITDA up over 160% to $1.4 billion. And adjusted EBITDA margin grew to 48%. This really shows the operating leverage in our business, with over 80% of top line growth dropping to the bottom line. And in our first full year of positive net income, earnings per share was $1.56. We've built strong momentum entering 2025, and we're staying focused on delivering another year of profitable growth. So let's talk a bit about Q4. Revenues more than doubled year over year to $1 billion, driven by strong growth across the board, including transaction volumes, interest earning assets, securities lending, and gold subscriptions. And like you said, Vlad, Robinhood Gold subscribers are closing in on 3 million, driving annualized gold subscription revenue higher to now above 170 million. We also stayed disciplined on expenses in Q4. This brought full year adjusted OPEX and SBC to $1.94 billion, up 7% year over year and within our original outlook. You may recall a couple of years ago, we set a goal to bring share-based compensation as a percentage of revenue into the zone of 10%, down from higher levels in the past. So it feels really great. We achieved that milestone in 2024, and we're staying focused on managing this even lower over time. And as you saw, we had a large tax benefit in Q4. Given our recent strong performance and forecast of continued profits, we released most of our valuation allowance. We now expect our long-term tax rate to be more normalized in the mid 20% zone before any quarterly items. Now, as we look to 2025, we want to keep investing for profitable growth while driving efficiency. So for revenues, we're planning on another year of double-digit growth, driven by product innovation, market share gains, and expanding into new markets. And on expenses, we'll keep managing our existing businesses to low single-digit growth or even lower, and then make focused investments for growth for both new products on our roadmap and increasing marketing by another $100 million or so this year. And we're keeping our hands on the wheel as we monitor the environment and evaluate potential investment opportunities. So our outlook for adjusted OPEX and SBC is a range of 2.0 to 2.1 billion. Now, it's important to note that this does not include provisions for credit losses, any large regulatory charges, or anything related to our acquisitions of Trade PMR or Bitstamp. And the midpoint of our outlook range is up about 10% from 2024. As for provisions for credit losses, these have been in the zone of about $20 million for the past couple of quarters, and we expect they'll gradually increase over time from here. As you know, this will really depend on balancing how quickly we onboard more customers and the underwriting risk, which we continue to manage closely. There's a couple other areas I'd like to highlight. First, we're now more than a quarter of the way through our $1 billion share buyback program, and we're on track for a 2 to 3 year total timeline. As a result of repurchases and other actions that we've taken over the past couple of years, we anticipate our diluted share count will be roughly flat in 2025. This means shareholders will benefit even more as we grow earnings and free cash flow over time. Second, we have a strong momentum to start the year. In January, net deposits were our second highest month ever, and equities, options, and crypto trading volumes were all up double to triple-digit growth rates from a year ago. In fact, January option volumes were an all-time high. It's also great to see January margin balances crossed $8 billion, doubling in the 8 months since we moved to industry-leading pricing. And while it's early, we love the progress we're seeing with new products that we launched in the past few months. For example, looking at annualized trading revenue, Legend is now up to 50 million and index options are up to 15 million. And both are showing nice incrementality and strong week over week growth rates. So we feel great about our business and financial results and remain focused on driving another year of profitable growth in 2025. We're continuing to work to maximize earnings per share and free cash flow per share over time. Back to you, Vlad.
It's really amazing to see how quickly Legend has become a $50 million business. I mean, that product launched and rolled out about 2 months ago. So index options too at 15 million, incredibly strong. Many of you joined us for Investor Day just in December in New York, where we outlined the long-term strategy. So in a nutshell, we believe there are multiple ways to grow Robinhood 10x over the next 10 years. And it's an ambitious plan, but we believe we have the right team, the right talent, and the right culture to deliver upon that. So let me tell you a little bit about what you can expect throughout 2025. So on the active trader front, we're going to keep pushing to make Legend the best platform for active traders on the market today. Our active traders should feel like they would be at a disadvantage using any other platform. We're also going to continue to add selection, and a comprehensive platform for event contracts is top of mind. It's a new innovative asset class. Robinhood's going to be front and center in leading the way, offering that to customers. On the share of wallet front, we're going to grow the Robinhood Gold Card from about 100K cardholders today to multiples of that size. And that's very exciting. You'll hear more about that and a bunch more gold products for our members at our gold event in March. And for global financial ecosystem, our 10-year arc, there's actually a lot that we're going to get done this year. So maybe I'll go a little bit deeper here. So one, more selection of crypto tokens. So in the existing app, the Robinhood main app, we're going to keep adding, and we're going to continue to accelerate. In fact, we've added 7 new assets since the election, and as we continue to get more and more regulatory clarity, you should expect to see that continue and accelerate. We're also investing in the Robinhood Wallet, which is a separate app, and it's our non-custodial crypto wallet. And that's the gateway to thousands of additional coins for our customers. We've seen a lot of good signs, increased engagement, increased usage, and we're going to keep making it better and better. And then we have Bitstamp. So as we integrate Bitstamp, it both allows us access to the exchange market, which is an institutional market. And we really see an opportunity there to drive the same sort of Robinhood effect that we've brought to retail to the institutional space with crypto. It also allows us to tap into Bitstamp's global reach, where they're live in 50 plus countries. And so you should expect that to continue to accelerate this year. But what I'm perhaps most excited about is tokenization. So I think Robinhood is uniquely positioned at the intersection of traditional finance and DeFi. We're one of the few players that has scale both in traditional financial assets and cryptocurrencies. And what that means for us is bringing real assets onto crypto technology, and giving people access to real world productive assets using crypto rails where they benefit from the liquidity and the other advantages of that technology. And what that means is equities, private investments, and more should be brought onto crypto technology to really unleash the true power of the crypto revolution. I talk a lot more about this in my op-ed in the Washington Post, so I encourage you guys to check that out. And I think we can make a lot of progress on that, not just globally outside the U.S., but even in the U.S. as well. So with that, just close by saying teams have been working incredibly hard. The roadmap is full. There's so much to do, and let's open it up to questions.
Thanks, Vlad. For the Q&A session, we'll start by answering the top few shareholder questions from Say Technologies, ranked by number of votes. We passed over questions that we already addressed on this call or in prior quarters and grouped together questions that shared a common theme. After the Say questions, we'll turn to live questions from our analysts. So I'll kick it off with our first question from Say. First question is from Ali D, who asks, when will the gold credit card be available to a broader audience? Vlad?
Thanks, Ali. Very soon. So thank you, by the way, to all the customers who have expressed interest and continue to express interest in the gold card. The demand for the card has been extreme, and I think that's really been driven by the product experience. So it's not just offering customers great rewards with 3% cash back, but the virtual cards and the digital features have gotten really amazing reviews. And we hear from customers every day how much they love it and how they can't believe that other credit cards don't have these features. So today we have a little over 100,000 cardholders. We're working to roughly double that number in the next few months. and that's going to be on the way to growing that to multiples of the 100,000 level this year. So we'd love to move even faster here, but this is about the speed at which successful credit card programs in recent years have rolled out. And I think it's just important to balance the speed of rollout and satisfying the demand with being incredibly prudent regarding the spending and borrowing activity. Jason, you want to add anything to that?
Yeah, I'd just say, Vlad, you and I have both heard Ravi, who runs credit at Robinhood, several times say how important it is that we be cautious in the short term so that we can be ambitious in the long term. And I think we're striking the right balance. But obviously, we want to move as quickly as possible for customers.
Yeah, and the rollout's increasing, so hopefully you'll get one soon.
Thank you both. Our next question comes from Alex B., who asks, will Robinhood offer the ability to do deeper analysis on individual stocks within the app? Will it have charts for financial data over time, such as revenue, net income, etc., and have a feature to compare metrics versus other companies?
Yeah, thank you. I recognize that, Alex B. Congrats on having the 2 of the top 3 voted questions. In short, yes. So one of our goals is for Robinhood to have the very best information, research, and tools in app. I think we started out offering the best service for you to actually place the transaction. And over time, we've been moving more upstream. And the goal is to not just be the best place to complete the transaction, but also the best place to do your research and to generate ideas. And over the past year, we've really been focusing on furthering that across the charting and the technical analysis experience across the product. You've seen that with Robinhood Legend, which, as we mentioned earlier, is already up to a 50 million annualized revenue rate just after a few months. So we've been focusing on making the charting experience really, really good. Customers are now asking us to bring that into mobile, and the team's continuing to execute, constantly shipping new features. But there's more to do. You mentioned fundamental analysis and some of these more fundamental indicators. Those are on the list as well. There's plenty more to do, and the team is on it. We're excited to share more later this year at Hood Summit, which is our active trader event.
Thanks, Vlad. And to round out Say Q&A, we have another question from Alex B., who asks, will Robinhood offer loans such as microloans, auto loans, etc.?
So over the long term, the company seeks and aims to fill all of our customers' financial needs. So we want to be the place where you can buy, sell, or hold any financial asset and conduct any financial transaction. And that's a big part of our second arc, which is being number 1 in wallet share for the next generation. So of course, lending needs are a big part of that. Customers have borrowing needs, and we're going to address that in a number of ways. So first, we've really been focusing on the margin product. So we, a little bit under, I guess, a year ago, about 6 to 7 months ago, we revamped our margin offering and we started offering industry-leading rates. Since then, the margin book has more than doubled. So we've really made tremendous progress there. Even after that doubling, we've got a long way to go to being competitive in terms of size with some of our incumbent competitors. So I think margin has a lot of room to run. We're going to continue to invest there. On the credit card side, which as well as a lending product, we've been making tremendous progress. That loan book's been growing as we get more and more customers onboarded. And as you guys know, we've got a lot more customers to go. So our focus is on nailing those 2 products, which obviously have a sizable lending component. But once we do that, you should expect to see us cover the wide range of customer borrowing needs. So I encourage you guys, once again, Robinhood Gold customer event in March is going to be exciting.
Thanks, Vlad. That concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking time to ask these questions of Vlad and Jason and look forward to more next quarter. Now we will open the call to Q&A. We ask that each person limit themselves to 1 question and return to the queue if they would like to ask a follow-up. To enter the queue, please press star 11 on your phone. If you would like to remove yourself from the queue, please press star 11 again. Our first question comes from Mike Cyprys from Morgan Stanley. Mike?
Great. Hey, Vlad. Hey, Jason. Congrats on the strong results here. Great to see. So you guys outlined a ambitious goal here to be number one in wallet share for the next generation and to broaden out services beyond trading. Given the early success that you've had so far with retirement and the waitlist for credit card, can you just maybe talk about what hurdles you might face to achieve this ambitious goal, how you might overcome them, and the progress you expect to make here in 25? Thank you.
Yeah, I'll take that one, Mike. Thanks for the question. I think we have a huge opportunity. The goal is over the long run to be the place where customers can buy, sell, or hold any financial asset or conduct any financial transaction, and to not get stuck with what worked for millennials, but also make sure that we're relevant as the financial home for the next generation. Now, there's a couple of things that we have to continue to do. Number one, this opportunity isn't one that we're alone in wanting to pursue. I think that everyone wants to be the home for their customers' financial needs. And so it's going to involve us continuing to innovate, invest in technology, continue to pick the right products to focus on, and make sure we're well positioned relative to our competitors in the two big technological shifts that are going to transform the financial industry, which are artificial intelligence and crypto technology. And I think we're well positioned. We've got the team, the culture, and the people to do this. So, and you should see us accelerate more products, more features to further wallet share and put us in a position where I think relatively few companies are in to capture the 84 plus trillion in assets that are going to be flowing down to younger generations in the next few decades.
Great. Thank you, Vlad. Just a moment while we get our next person here. Our next question comes from Dan Dolev at Mizuho. Dan?
Hey, team. Great job as always. Epic results again. I have a quick question on sports contracts. You mentioned it at the Analyst Day. Piqued our interest. We did our own internal survey work, which showed massive opportunity with, significant amount of your users also engaged in sports betting. You started it out. It was shut down temporarily. So can you maybe lay out some of the long-term plans or medium-term plans for this, very important, part of the universe? Appreciate it.
Thanks, Dan. Yeah, I'll field that one. I think prediction markets are the future. I think they're the future, not just as an active trading asset, but also news and information. And Robinhood's going to be right there, leading the way. I think we're going to continue to innovate. And you saw this last year when we launched the presidential election market. So we were one of the few platforms that offered the ability to trade the election. And that was very successful for us. We had over 500 million contracts traded in right around a week leading up to the election. And so what you should expect from us is a comprehensive events platform that will give access to prediction markets across a wide variety of contracts later this year. So the team's been hard at work at that. As with any new innovative asset class, we're pushing the boundaries here, and there's not regulatory clarity across all of it yet, in particular sports, which you mentioned. But we believe in it, and we're going to be a leader. So you should expect us to not just offer it, but continue to drive and push for regulatory clarity industry-wide.
Thank you, Vlad. And just a moment, please. Our next question comes from Patrick Moley at Piper Sandler. Patrick?
Yes, good afternoon. Thanks for taking the question. I have a kind of a two-parter, Jack, so don't get mad at me. But first, both on the crypto offering. First, in terms of, Vlad, you mentioned that the available tokens on the platform, you're going to accelerate the rollout of tokens as we get more regulatory clarity. Can you maybe just specify what you mean by regulatory clarity? Are we waiting for comprehensive legislation, or do you feel like there's going to be something else that can give you the green light to expand that offering? And then secondly, I noticed that you didn't mention staking, I think, in your remarks. Is that still something that you're looking into on the crypto front? Thanks.
Yeah, absolutely. I mean, let me just say that we don't have any technological barriers to adding tokens or services like staking. They're live in the EU, for example, where we've been seeing great adoption, and we have the engineering and the infrastructure capability to add tokens remarkably quickly. You guys might have seen that. We were able to list the Trump token very quickly while maintaining the rigor and the approach around Inauguration Day. So, more regulatory clarity is needed across multiple domains. We have been adding more assets, but as I mentioned earlier, I think the real power of crypto technology is when it's able to be applied to real world productive assets, which would be under the securities regime. So we still need a comprehensive set of rules and regulations for listing crypto asset securities that will allow us to tokenize private companies as well as public securities. And that's one of those things that we're going to be continuing to work on, both overseas and in the U.S.
A couple things that I would just add in terms of clarity that would be helpful, particularly for coins that have the characteristics of a security. I think it would be helpful to get additional guidance on being able to safely list those coins. And I know the SEC has had remarks recently suggesting that they're looking at that. And I think that there's also a need for additional clarity on staking as well. And again, it's encouraging to see the improved backdrop. The administration appears very supportive of innovation in the crypto space, which I think is going to be great for customers as well as great for the companies like Robinhood that are competing in this space.
Thank you both, Vlad and Jason. Our next question comes from Tannor from Future Investing. Tannor?
Tannor.
Hey guys, thank you so much for having me. I just wanted to say you guys have some of the best pricing for crypto on the market for retail. And yet, even then, your take rate is essentially going up quite substantially. Can you give us some insight on your pricing strategy and where you foresee the pricing will settle over time?
Sure. Thanks, Tannor. I'll start, and Vlad, you can feel free to add in. If you go back far enough, our take rate was only 10 basis points, and it was just a starting point. And since then, what you've seen is that we've been experimenting over time, balancing, ensuring customers continue to get a great value proposition, but we balance that with shareholder returns. And we have been experimenting, and we have been giving customers a great price, even as the take rate has increased. I think it's up 9 basis points this quarter versus last quarter. We're not done experimenting. It doesn't mean that it's going to keep going up. One of the areas that we're focused on is how to give more compelling pricing to the highest volume traders. And so we'll be experimenting there as well. But when we think of take rates for crypto, when we look at January, take rates are pretty much in line with what we saw in Q4.
Yeah, and the only thing I would add is one of the things we're pretty excited about is a feature called Smart Exchange Routing that we rolled out just a couple weeks ago. And this was really preparing for when we integrate Bitstamp and we have an exchange business, and also part of the integration with Robinhood Legend, which is our active trader platform. A lot of active traders on the crypto side want to engage directly with the order book. So giving customers an option to route to exchange, see the exact exchange pricing, and pay a fee on top of that rather than rebate I think is something that people have been requesting. So we're going to continue to work on that. Early results are promising, and we want to give customers more options while still maintaining industry leading pricing across the board.
Thanks, Vlad. Thanks, Jason. Our next question here comes from Steven Chubak of Wolfe Research. Steven?
Thanks, Vlad. Thanks, Jason, for taking my questions. So wanted to double click into the crypto discussion and the evolving competitive landscape. So as you both noted, just given the strength of your crypto offering, enabling you to grow meaningfully while still flexing some pricing power, like once we have regulatory clarity, how would you frame the incremental revenue opportunity from launching additional altcoins and leaning into opportunities such as staking and lending? And was hoping you could also speak to the risks. One of the questions we get quite often is how do you handicap the risk of larger competitors entering the space and potentially at more competitive price points?
Yeah, I'd maybe take the risk point first. I think consistent with more competitors entering the space, I think it's right to assume that crypto is becoming more mainstream and more accepted. And I think we're beginning to see that. You saw the strength of crypto in the quarter. A lot more customers were trading crypto. So while there may be more competition over time, I do expect that there'll be greater demand for crypto as well. And sorry, this first part of the question you had for me?
Yeah, I mean, maybe I would just add that, what customers really love about trading crypto on Robinhood is that they not only have access to crypto, but they can trade equities, options, now futures, soon a comprehensive suite of event contracts all in one place. And so I think obviously we see some opportunity from continuing to roll out the offering, and we've invested a lot in the technology. And tokenization, once permissible in the US, I think is going to be a huge opportunity that Robinhood is going to be front and center in.
Thanks for the question. Our next question comes from Brian Bedell at Deutsche Bank. Brian?
Oh, great. Thanks. Thanks. Good afternoon, guys. If I can bundle one question in here on the new initiative, the Legend platform, the index options, and also futures, just in terms of the revenue that you quoted, how should we think about how that is pacing in terms of a growth rate? I guess, in other words, did you get a lot of take up initially and then the growth rate slowed, or do you see that growth accelerating? And if you can comment on all three of those areas.
You want to take that?
Sure. I mean, as we mentioned, Legend is now up to a $50 million annual revenue run rate. Index options, 15 million. Index options just recently rolled out to everyone. And then futures, we've just started rolling out. In terms of the growth rates, these are strong week over week growth rates. We feel really good about that. Stepping back, looking at the long term, I would say, each of these represent pretty substantial portions of the overall market. And, we're demonstrating, I think, an ability to take market share and compete. And so early signals are strong. The week over week growth rates are strong, and we've got really positive feedback from customers. So where I'm sitting today, I'm really optimistic.
Yeah, and I'd say these things are compounding upon one another. So we rolled out index options on Robinhood Legend, and that further accelerated the growth. And we see continued opportunities that I think will be tailwinds. Not only is it going to continue to penetrate the customer base, but I think we see more opportunities on the option side for Robinhood Legend. Our customers are really happy with the equities trading experience. I think that's world-class on Legend. And I think we see some more opportunity on options to make it even better.
Thanks for the question. Thanks, Vlad and Jason. All right. And our next question comes from Devin Ryan at Citizens JMP. Devin?
Thanks so much. Hi, Vlad. Hi, Jason. How are you?
Hey, Devin.
Hey, Devin.
Hey, and congratulations on the great end of the year and the business momentum. I want to shift gears a little bit and dig in on the custody opportunity for advisors. We're obviously now a few months removed from the trade PMR announcement. I know you still need to close that deal, but it would be great to get any anecdotes on how that deal has been received in the market, what the feedback has been from those advisors, whether you're seeing demand from other advisors in the market, and just really kind of big picture how you're planning to differentiate in the RIA custody market. Obviously, a massive TAM, but just would love an update on that as well. Thanks.
Yeah, I'll field that one. I think we see advisory as an enormous opportunity, and we're gonna tackle it very, very aggressively. When we talk to advisors, including trade PMR customers, I think by far the number one thing that gets everyone very excited is access to the Robinhood customer base. I think what gets Robinhood customers excited is being able to talk to a human advisor. I think in particular for customers that are a little bit older, closer to retirement, and have a lot of assets, being able to access a human advisor to help them with their financial needs is absolutely critical. So I think we can solve both problems. I think we can appeal to customers that may be a little bit older, that have more comprehensive needs, and they love the digital experience of Robinhood, but would love a human advisor. And for a lot of these advisors, including trade PMR customers, these guys are entrepreneurs, and they see an opportunity for Robinhood to help them tap into the 25 million customers in the U.S. that are going to have their wealth growing tremendously over the next several decades, particularly as they inherit, tens of trillions of dollars from older generations. So we see this as a big part of being the number one platform for wallet share for the next generation, and really being the first truly multi-generational platform. We think that our customers' parents should be using Robinhood, their children should be using Robinhood, and nobody's really nailed that product experience for what investment management and financial services looks like for the entire family. And I think not a lot are trying. We're having some success. The initial rollout there will be of the credit card, where it's actually a wonderful experience for the entire family. And you should expect to see us bringing more of that into investment management and advisory.
Thanks, Vlad. One moment for our next question. Our next question comes from Amit is Investing. Amit?
Never heard of him.
Hey, Vlad. Hey, Jason. Thanks for taking my question, and congrats again on an incredible quarter. Last year, you all told investors that as rates come down, you can expect more trading volumes, and that thesis has basically played out. I think right now we're in kind of a Goldilocks zone where rates are strong enough for your net interest income to sustain itself, but not low enough to take away that income. So is the guide for 2025 similar to rates coming down would lead to an increase in trading volumes, or is there a diversified view that investors should have on the impact of rates on the business?
Yeah, I'll go ahead and take that. Thanks for the question. So the comments I gave on revenue is that we expect another year of double-digit revenue growth. So the precision that we were providing on guidance was really around OpEx at 2 to 2.1 billion. We are seeing that relationship, that natural hedge play out, where rates go one direction and trading goes the other. And just looking at the print this morning and the updated expectations around rate cuts, I think there's still room for rates to come down this year. Maybe perhaps it's one cut or maybe two. But I feel like our business is really designed to thrive regardless of the macro backdrop on interest rates. And we've seen the pickup in trading. Rates have come down. We're still, to your point, making strong interest. And we've been diversifying our business. As I mentioned at Investor Day a couple of months ago, we now have 9 business areas with revenues over $100 million. So we feel like we're really well positioned, and it has been nice to see our thesis play out, that there's a natural hedge in this business, and it's really been playing out and showcased in Q4.
Yeah, I just want to add there, we're building a business that's intended to not be reliant on external factors for revenue. So that's why, even with our yield products like the Gold Sweep, the goal would be to operate with a certain margin and vary that with the rates, but we want to be competitive and offer customers a great deal regardless of the rate environment, and generate a small but healthy margin regardless of the environment as well. Same goes for margin on the other side. That'll become more compelling with rates going down. But it's still going to be a great business for us that we think we can continue to grow market share very quickly in.
Thanks for the question. In just a moment. Our next question comes from Alex Markgraf at KeyBank. Alex?
Hi, everyone. Thanks for taking my question. Maybe just as we think about some of the growth drivers for 25, would be curious to get your thoughts on how you're thinking about the approach to deposit incentive offerings in 25. I think proved pretty successful in 24. So any updated thinking there for 25 would be great. And then, Jason, if you could just clarify on the Legend revenue composite, or the Legend revenue number of 50 million, is that viewed as entirely incremental at this point? Thank you.
Yeah, I'll start with the incrementality. So the data is still pretty early, but we've seen enough to be confident that there's strong incrementality here on Legend. We're going to let it play out a little bit more before we provide additional clarity. But it is nice to see. We are seeing a very strong uptake on Legend from existing customers. We're also seeing new customers. And I think over time, there's going to be, particularly as we round out the product suite and the user experience, an opportunity to really grow incrementally with existing customers and bringing on more new customers. Vlad, do you want to take deposit incentives?
Yeah. On the deposit incentives front, we've got one going right now for retirement that's going to be on incoming transfers and rollovers. And that's very exciting. Actually, we've been seeing a lot of rollovers. The rollovers experience is much smoother than it was last year. So there's been tremendous improvement there. We also are offering and experimenting with APY boost incentives on the Gold program, and those are much more personalized. So I think the future is more personalization, where we actually really lean into our strengths as a technology organization. And we expect to continue to make great progress. I mean, 50 billion in net deposits over 2024 was a big number, multiples of how fast incumbents are growing, and we see plenty more opportunity to grow our business.
Yeah, and I would just add that we love the economics on these deposit matches. The payback periods and the overall economics are very very attractive, and growing assets is just great for business. So we'll keep that going.
Thank you both. And our next question here comes from Ben Budish at Barclays. Ben?
Hi, good evening, and thanks for taking the question. I was wondering if you could unpack a little bit more detail around your new Gold members. How many of them are net new to Robinhood? What's the sort of activity associated with the credit card? So how many of them are net new to Robinhood? How many of them are new Gold members? And what sort of activities are you seeing sort of associated with the adoption of the card itself? Are you seeing bigger balances, stronger deposits? How should we think about that as sort of a additive to kind of your platform approach to the customer?
Yeah, I mean, first off, we're investing a lot in the Gold program. And I think you guys are seeing the fruits there. When someone becomes a Gold subscriber, they grow AUC, assets under custody, much more rapidly, net deposits more rapidly, and they adopt our products at a much higher rate. So the journey is basically someone joins Robinhood, they become a gold member relatively quickly, and then their rate of assets under custody, net deposit growth, and multi-product adoption increases. And so we've really made a ton of progress growing the attach rate, particularly early on in the customer's journey with Robinhood. I think we mentioned in Q4, out of the new net funded accounts to Robinhood, 30%, north of 30% ended the quarter as gold subscribers, which I think is just tremendous as an attach rate. And I think we can continue to work on that. With the gold card in particular, one of the really interesting things, I think we're actually one of the few that are capable of measuring this as an integrated platform, but we are seeing strong second order effects between users of the credit card and the core brokerage business, which I think validates our thesis that there's a gold flywheel. And if we sort of like make each of the individual pieces better, the overall customer value to the Robinhood ecosystem benefits tremendously.
And in terms of the cardholders, so we're a little over 100,000 cardholders at this point. We plan to increase that by several 100,000 this year. In terms of the mix between kind of new customers or new to gold customers, there's a healthy portion of our wait lists that are not currently gold members. So we see that as a big opportunity.
One moment for our next question. Our next question comes from Roy from Crossroads Investing. Roy?
Thanks for having me, guys. Tremendous quarter. I loved seeing the rollout of options at the UK this week, and I'd really like to hear more about the international expansion, specifically if future international expansions are going to follow a similar roadmap as the UK launch, starting with equities, building on products from there, and then specific country products such as ISAs and SIPs in the UK. And I'd also like to know if those are coming out later this year in the UK as well.
Hey, Roy. Short answer, yes. Yeah, we're spending a lot of, we're going to make a lot of progress internationally this year. We were extremely happy with the options launch. That makes us one of the few brokers that are offering options trading in the UK. And the response to that from customers, maybe you saw on socials, was quite positive. So customers in the UK wanted it. We were happy to deliver. And I think in the future, we're going to continue to round out the offering. And the benefits of having an integrated platform with a single technology stack is, as we continue to roll out things in the US, they'll accrue to international markets. 24-hour market is an example. Now that we have futures, once we get regulatory clarity, we'll look to be offering that in the UK as well. And in the EU, the focus is again on rounding out the product suite as well. And we're also looking ahead to other markets. The goal is for Robinhood to be everywhere, be anywhere where customers have smartphones. You should be able to open up a Robinhood account and benefit from our suite of best-in-class financial services. So you should expect us to not just round out the product suite in our current geos, but expand from there. And the team's been doing a nice job accelerating that.
And I think in terms of the sequence of products, if you look to the EU, we started with crypto, and in the UK, we started with brokerage. I don't think that there's necessarily a set playbook on what goes first. It's going to depend on the market that we enter.
Yeah, and I tell you, look out for that. I think we've been talking a lot about the gold event, but we're going to have our first crypto event, which is going to be in France around mid-year. So we've got that agenda already packed.
Thanks, Vlad and Jason. Our next question comes from Ken Worthington of JP Morgan. Ken?
Hey, Ken.
Hey, good afternoon. Thanks for taking the question. So I wanted to dig in a little bit deeper on the credit card. You have balances, I think, both on and off balance sheet. How do the economics work between on and off balance sheet, and what happens with credit risk between those two buckets?
Yeah, so credit risk is very very similar between the two. We're holding the risk, and the economics are also very similar as well. And I think as we go forward, this is something that the team is evaluating and will be optimizing over time.
Thank you, Jason. Thanks, Ken. Our next question comes from John Todaro from Needham. John?
Hey guys, congrats on a great quarter. Question on the crypto side. Vlad, I remember you calling out stable coins pretty positively back in December, and they've obviously grown a ton over the last few months. Just wondering if there's more possibilities of kind of doing some direct product launches around stable coins and monetizing that adoption a bit more.
Yeah, absolutely. As you guys probably know, we entered into we have USDG that we partnered with a few other great companies on the global dollar network, which is going to be a stable coin that passes back yield to holders, which we think is the future. I think many of the leading stable coins don't have a great way to pass yield to holders. And that makes them not ideal for holding dollars in that form. So, you see a lot of use for transaction, moving money back and forth. But in terms of actually like holding dollars in stablecoin form, yield is an important piece. I should say that, we see the power of that, of the stablecoin ourselves as a company. So I don't think it's just interesting for retail, but there's benefits to the technology and the 24-hour instant settlements for us as a business. And in particular, we're using stablecoin to power a lot of our weekend settlements now, and we're using it increasingly. And I think Robinhood's going to be an early adopter of that, but we should expect that those benefits that we're seeing other companies will eventually come to realize, and that'll be a tailwind for institutional stablecoin adoption industry-wide. So stay tuned. There's going to be a lot more on the dollar global network, and yeah, we're going to be investing in this space.
That's great. Thanks, Vlad. Our next question comes from Evan from Stock Market News. Evan?
Awesome. I appreciate you guys for having me. Thank you for taking the question. Congratulations to you guys on the quarter.
Thanks.
We've talked about a lot of very different opportunities here, and I appreciate a good job passing 1 billion. We talked about a lot of different opportunities here: crypto, active traders, international opportunities, prediction markets. How do you go about ranking these different opportunities, maybe in both the scale of them and how immediate you might be deploying these finite resources to them? And do you guys think you need more people, more resources to go in and attack all of these opportunities you guys see?
Yeah. Capital allocation is kind of the job, right? Resource allocation and capital allocation is what we do. I'd say these are the three arcs of our business. So if you look at being number one in active traders, that's the near term arc. So improvements that we make to the products and new features immediately or very, very quickly generate more revenue. I think you're seeing that with Robinhood Legend and index options, where handful of months after launch, Legend's already at a 50 million annualized revenue rate, which is pretty amazing. And active traders were scaled. New product enhancements immediately result in more revenue for the business, more business value. That gives us fuel to pursue our other two arcs, which are longer term. So I would think about it not as we're going to nail active traders, then we're going to be number one in wallet share, and then 10 years from now, we'll start working on international. We're pursuing these independently. They're going to build off of each other, and the tool, the revenue, and the resources we get from active traders are going to fuel expansion into bigger and broader markets. I think it's exciting. What's even more exciting, and I'm sure Jason agrees with this, is being able to do all of this and execute while keeping OpEx growth to a minimum. So keeping our hands on the wheel, as you would say. And I think that just comes down to our embrace of technology. I think we've seen a lot of benefits from, adopting AI technologies, becoming more efficient. We've seen that on the software engineering side, but really across the board. And I think there's more tailwinds there. There's a lot more we can do, but we do believe we can continue to increase product velocity, roll out more features, and grow while keeping OpEx growth in check. I think that's just from any good company leveraging AI, you should expect to see that in the future.
Yeah, and there's no shortage of ambitions to drive growth, and we've been allocating headcount where necessary. But you saw the tremendous growth that we drove in 2024. Yet the OpEx did not go up that much, and that's not an accident. We have a very expense light business model. I've talked a lot in the past about how 90% of our OpEx is fixed cost, and that was really showcased this quarter in Q4 as over 80% of the incremental revenue dropped to the bottom line in terms of profit. But when we look around, we're not constraining the business with resources. We're really doing as much as we think we can prudently manage and roll out with a high quality product for customers.
Thanks, Jason. Thanks, Vlad. That concludes the Q&A portion of our call. Before we end the stream, I'd like to give it back to Vlad for any closing remarks. Vlad?
Well, I'd like to thank Jack. I know we promised Chris in the flesh, but he was under the weather. Jack, I think you did a very, very nice job with that. Yeah, I think that I want to thank you guys. Hopefully, you enjoyed the new format. Both retail analysts and institutional analysts who've been along for the journey. It's been a strong quarter, but we're nowhere close to done. This is going to be a big, intense year for us. And I think the team is super energized at the opportunity ahead and delivering even more for our customers. Thank you.
Thanks, everyone.
That was surreal.
Yeah.
So it might have looked a little weird seeing us not talk while the voices were going. The phone call that we had that we were listening to, it was live. It was just a little bit ahead. So we were probably ahead 30 seconds maybe. Let it be known that I was the only retail investor that spoke and saw green candles. We're all in the mid-talk, and there was red candles.
That's true. That's true.
Yeah.
I tanked us from 66 to 65. So
I needed to save my covered call somehow. I needed to. So
yeah. Dude, what the fuck what just happened, bro?
Has that ever been done before?
No.
That was game 7, down by 2. Robinhood hits the 3. GG, it's over. And then they do a press conference about the game. That's what just happened. That's what it looked like. They were doing a press conference. And that was incredible.
And I think it's intentional. You hit the nail on the head, Amit, that it looked like a press conference after a big game. And this sounded like one of those teams that it's early in the season yet, but they're putting points on the board, breaking records, smashing expectations, and they have high confidence going forward. My goodness. They just missed the mic drop moment.
Yeah. Yeah. No, that's very, very exciting. The stock deserves to run. Holy.
I mean, dude, this wasn't a joke. Guys, we're not going to spend time breaking everything down. We will be back. Tannor will do his show tonight, his FinTech Frenzy, and he'll talk all about Hood earnings. We will be back on Hood Weekly.
When is that, Amit?
Your FinTech Frenzy?
Yeah, yeah, but I was just 8:30.
8:30 every day. Tanner's YouTube channel. Make sure everyone goes there. But on Hood Weekly on Monday, I mean, I think we need a week to kind of sit with these results to even kind of see what's going on here. But dude, this was exceptional. This was incredible. I can't find a red flag because there's hard to find any because I don't think there are. And the main reason I don't think there's any red flags is because OpEx is they're decreasing expenses while maintaining top line growth, which is not, it's special to do that.
By the way, Amit told us that we cannot keep this a surprise. Don't tell our audiences about this. So Evan, he was a part of this as well. So he was telling everyone that he'd have a call, but Amit said, the SoFi Weekly crew cannot talk about it. It was so hard to keep this from you guys, but I had a lot of fun, even though it's a small thing. Like, I mean, it's really in the grand scheme of things, it means nothing. But I think that, seeing appreciation from these companies that we're covering that, are doing excellent things was amazing. And by the way, guys, just to give a bit of how the sausage was made, they didn't prep the questions for us. They said you can say anything. If you don't like something, go ahead, say this is bad. Like we don't want any pumpers. Like, this is what they said. So, absolutely.
To underscore Tanner's point, the goal was not to get people that are excited about Robinhood to ask a question. The goal was genuinely, and this was when we got the meeting with them, they were like, we just want you guys to feel like you're from JP Morgan or Goldman Sachs. Like those guys are institutional analysts. That's their job. They take it seriously. We want you to take it seriously. And if you want to ask a really hard question, go for it. If you want to say something you don't like, just do what you want to do. And my question, I think, was, I care about the net interest revenues. I talk about on the market open every time. If rates come down, what happens to Hood? Roy's, has been upset that the ISAs are not in, the UK yet. What's going on with that? Tannor on crypto. So I think all of us asked really strong questions, but the fact that they gave a fuck to let us ask those questions, to make us feel like we're JP Morgan or Goldman Sachs, even if we're not, that's just really special.
Yeah. And it's very surreal. It doesn't feel real at all. But this is awesome. It's a high honor. And it's not just, Robinhood's openness to us. Like, you can see it in the way that they do their IR page. You can see it in the questions that they're taking. I mean, they purchased Say Technologies for this. The summit was not just, us. It was, over 500 people that were invited, just from all walks of life. It gives you great confidence when you see the culture, the level of execution, the plan going forward, leadership's in place, and they're being increasingly transparent. Sign me up.
Yeah. A company giving this much love to retail. I mean, like, how do you not get a little bit emotional about it? Like, how do you not get emotional about baseball? That type of thing. I had a lot of fun. This was good.
This was special.
Yeah.
This was special. I think Hood's proving they're a generational company. I think they're proving they are a generational company. Congrats, everyone. I'll talk a lot more about this tomorrow on the Market Open. Tannor will talk about it tonight. Hood Weekly next Monday. We will have a lot of thoughts, but congrats to everyone.
Thanks, guys.
Thank you, everybody. We'll see you guys next week. Bye, everyone.